too. Right. Not just investment banking, but we can also do more consumer-y stuff that would help them. But that's, to your point, but, I mean, not bread and butter at the end of the day.
But they've got a great business with their private wealth management business. When we sell your company through one of our M&A trades, they already have a mechanism set up that when you sell your company and you pocket your $1 billion or $2 billion, we've got a Goldman Sachs private wealth management person sitting right here next to you when that check clears, and they will help you out, and they will put it to work, and they will get you access to all the great investments that Goldman Sachs has. So they kind of have that. What they don't have, obviously, is the retail business, the consumer business. And quite frankly, again, if I were thinking about them, I would be like, that's not our business.
That's okay, right. Yeah, like, you don't need that sticky deposit.
Everything to everybody.
Also, should we talk about that? Are they 5 days, by the way?
What's that?
Are they 5 days a week back in the office?
I think they're 5 days.
I think they might be.
I think they're 5 days. I think JP Morgan might be 5 days. So a lot of folks are, but that's going to end up being unusual, anachronism. I think the world is kind of on the hybrid schedule. So right now, let's go to a conversation. Goldman Sachs Group Chairman and CEO David Solomon. He speaks with Bloomberg's Jonathan Farrell about the future of Goldman Sachs, about the future of the financial services industry. They are over in lovely Versailles, France. Let's go to that conversation.
Thank you. Appreciate it. Very happy to say alongside me, David Solomon of Goldman Sachs. David, good afternoon.
Good afternoon. Thanks
it's good
for
to see
having
you. Fantastic to see you in Paris as well. Paris, France. I think we need to talk about France first, and we'll move our way through the business and talk about the United States as well. Typically, I can say, as a Brit, that we used to look at France as sort of anti-business, not a place you'd want to put an employee. Perhaps you'd choose London over Paris. That seems to have changed. Am I right?
Well, it's evolved a little bit, and Brexit had a big impact on that evolution. We have between 350 and 400 people in Paris now. That's triple what we would have had, 5-6 years ago. So there's been an evolution. I do think it's still a complex place for a professional services person to put an employee. In our dialogues, here we've talked about that. It's one of the things, I'm encouraged by. I think the administration is looking to do things here that actually improve, this is a business environment. And I think one of the things that is interesting is we've chosen France. It's a very, very important hub for us here on the continent. But I'd also say our people like living here. And one of the things in a competitive world for talent is we give our people much more latitude to work and operate out of places that they want to live. And it's certainly a very attractive place to live.
I wanted to ask you directly, have you chosen France because somewhere else is getting worse or because France and the continent is getting better?
Well, I think it's a combination. I mean, France on the continent has gotten better. The regulatory structure requires that we have more people here for certain functions that are important to our business. Our clients are here, and we want to be near our clients. And so, it's a combination of things that make this an appropriate place for Goldman Sachs to continue to grow.
I think a lot of us going forward through 2024 into 2025 feel like we're flying blind a little bit. Do you have more clarity, more visibility on the future of Europe or the future of the United States?
I don't have a lot of visibility on the future of the world, let alone Europe or the United States. I know there are a lot of people that you talk to that are very sure as to how things will play out as we go forward. I tend to look at things and think about risks. How do we manage risks? What are the tails that are out there that we need to be concerned about? When I think about economic outcomes, I think about distribution of those outcomes. And so, there's a perception of the direction of travel. We can certainly talk about that, but I certainly don't know what the direction of travel is. I will say, going back to what we were talking about here in France and just listening to, a number of officials that spoke at lunch today, they're talking about ways that they can accelerate more entrepreneurship, more investment, more flexibility, and also more strengthening and interdependency in Europe. Those things are hard to execute on, but I think they are very important.
The White House is doing something similar, but it comes at a cost. I think the budget deficit was 6% of GDP, north of 6% last year, at a time when unemployment is south of 4%. Speaking of risks, is that one?
It's certainly one that I'm very focused on. I think the level of debt in the United States, the level of spending is something that we need a sharper focus on and more dialogue around than what we've seen. We obviously had a pandemic. We made a bunch of decisions, in that pandemic, but we're long out of that pandemic, and the spending levels, are continuing at a pace that I think is raising our debt level and creating issues for us down the road. So I think this is something that deserves a lot of attention. It's not getting as much attention as I'd like to see it get right now. We're obviously in an election year, so I'm not, I don't have my head in the sand. I don't think you're going to see that get a lot of attention prior to the election, but I do think it's something that requires focus. We need to deal with the debt and the deficits, and hopefully there'll be a lot more discussion as we come through the election and move into the next administration.
Well, let's give it a bit of time now if we can. I often say that the United States has a privilege of behaving recklessly sometimes that maybe the likes of the Europeans do not. Have you sensed there's been any kind of pushback from the Treasury market, from investors, against the backdrop and this risk that we're talking about currently?
Well, the reserve currency is a great privilege. I'm not going to sit here and say that I see in the near term, a threat to that in any way, shape, or form. But it's not something that you can take for granted. And the United States' ability to spend without constraint is not unlimited. Ultimately, the market will challenge that. Hasn't challenged it yet. I'm not saying that's something that's coming soon, but it's certainly something that we should be very cognizant of and very protective of.
Do you think the experience of the UK a couple of years back was maybe a case study for what we could face in America?
Well, that was a disruption to the gilt market, and it's one of the things I think you need to be concerned about. It's a risk issue I've highlighted before. At the time, the Bank of England had to reverse its course and become very accommodative to deal with that blip in the markets. We've had disruptions in the Treasury market before. We certainly had a disruption in March 2020. To the degree that we had a significant disruption in the Treasury market sometime in the future, we don't have a lot of capacity through the banking system to intermediate that. It would require very accommodative policy. If that came at a time where that was not right for the central bank to be accommodative, that would be a risk issue that would have to be monitored.
We've had some big moves in the last 3-4 months. I can just think about the start of 2024. We were looking ahead to maybe 7 rate cuts priced into markets from the Federal Reserve, went all the way down to none. I think Jan Hatzius and the team are down to 2, July and November. Big swings in equity markets too, David. Can we talk a little bit about that? I think we're seeing 10% swings in trillion-dollar names post-earnings. Is that good for business, that kind of market environment? Is that what you want to see?
The market's the market. And, I think there are a handful of things that are driving these platforms to grow earnings very significantly and gain a larger importance in the overall market capitalization. These hyperscalers, as they're called, I think have enormous competitive advantages in the world that we're operating in. And it's not been surprising, given some of the changes in technology in the last 12 months, that their market caps have accelerated. I don't worry about that from a market perspective. I think markets are relatively efficient. I do worry that the structure of the equity markets, particularly in the United States, but this is true all over the world, are bringing fewer and fewer public companies. And that is concerning. There's obviously an abundance of capital available in private markets, but I do think it's important that we have open, accommodative, strong public markets. There's tremendous disclosure, transparency in public markets. I think that's good for capital deployment. And, I am concerned that the breadth of the public markets is getting a little bit more narrow, and I think that's something for us all to watch and think about.
You've got visibility on the pipeline. Do you see that improving at all?
Well, it's easy to improve when it was zero. So the IPO market closed. It has opened up. We've seen some very successful IPOs during the course of the first few months of the year. I think the level of IPO activity will pick up in the second half of the year into 2025. It's not going to be as robust as it was during 2021, but I think we'll move back to what I'd call a more normalized environment for IPOs. That said, the overall size or number of companies coming public, companies are staying private longer, they have more access to capital, and that's something that I think it's important for us to think about. There are consequences associated with that.
Let's think about M&A as well. It's difficult in my position to understand which deal can get done and which deal can't get done based on current regulation. Tapestry, Capri, apparently that's a problem. Other deals can go forward. How much is that holding back M&A activity in the United States?
I think there's no question that the regulatory environment has been a headwind to M&A activity. I'd say, for example, large cap tech is kind of closed out because of the regulatory environment for making significant acquisitions. And I do think the regulatory environment has made it harder to understand or really expect exactly how it will intervene. And so I think that's had a chilling effect. That said, the world's a competitive place. Scale matters everywhere you turn. People are going to do what they need to do strategically to advance their position. And if they have to litigate it, they'll litigate it. Generally, those companies that have chosen to litigate have generally made progress. Nobody wants to go down that path. But I think at the end of the day, scale matters and confidence matters. And so confidence has been improving over the last 12 months. Certainly in 2022 and 2023, you didn't have high CEO confidence. That affects M&A. But based on the indicators that we can see, some that are visible, some that aren't, I think dialogue's picking up, and my guess is we'll move back to what I'd call more normalized levels as we finish the year.
The stock is picking up on that, up double digits year to date, up something like 60% from the lows of October. I think Oppenheimer said the first quarter was a near perfect print. You must be feeling better, almost vindicated about where this business is going now and how appreciated that is.
Well, I've always felt good about Goldman Sachs and the way the business has been positioned for a long, long time. We have a plan. We've made a bunch of decisions over the last 5 or 6 years to execute on that plan. That plan has included our One GS operating ethos. That plan has included putting more financial resources toward our client franchise and banking and markets, which has allowed us to meaningfully take market share from some of our competitors. We've grown our financing business, financing our clients, which is, plays to our strength given the way we're positioned. And we've also made some very strategic decisions over the last 5 years to bring a variety of businesses together in our asset and wealth management business. So we now have a real scaled platform in asset and wealth management, supervising a little less than $3 trillion of assets. And we're seeing margin improvement and growth in that business given the way we've positioned it. So I think the firm is very well positioned. We're executing on our plan. We're staying focused on our clients, and we've always been confident. What we can't control is the environment.
Sure.
I'd say 2022 and 2023 was not a great environment for our business. The environment's improved. I wouldn't say we're back to kind of, average environment, but we're getting there. And we're going to continue to stay focused on our clients and execute on our plan.
Let's talk about leaning into certain parts of the business. Would you be open to more acquisitions, particularly for asset management?
We're always, looking to grow and extend our franchise. Great asset or wealth management businesses. You don't buy them. They're generally for sale at certain points in time. You don't get to pick when those points in time are. At the moment, we're very focused on our execution. The bar to do something, very significant or transformative, I say this all the time when I'm asked, would be very, very high.
Yeah.
But if something came along at some point that we thought could accelerate our journey in asset and wealth management, bring accretive returns, strengthen our position, we'd certainly consider it. But at the moment, we've got a lot to do to drive our organic growth strategy, and we're making good progress.
Do you think those opportunities might be in Europe or elsewhere?
Well, we made an acquisition in Europe a couple of years ago, NNIP, which has been a good acquisition for us. It doubled the size of our asset management business in Europe, and it added certain capabilities, particularly around sustainable finance, that we felt were strategic for us. So we will, it wasn't in the context of Goldman Sachs, it was a $2 billion acquisition.
Sure.
It wasn't. But we're going to look. We have a strategy around our asset and wealth management business. We're executing on it. We've been very, very clear that we have room to grow and that we think we can grow this business high single digits and continue to improve the margins. And so we've got room to run, and so we're going to continue on that execuction path.
You've been acquiring talent as well. The former Dallas Fed president, Mr. Kaplan, is making a comeback. What's he going to be doing?
Well, Rob had a long and very, very important career at Goldman Sachs. He ran the investment banking business for a significant period of time. Rob was looking to come back into the business, and we decided he should come home to Goldman Sachs, and we're thrilled that he'll spend time with our clients. Rob has deep client relationships. He'll spend time with our people. He's always been a leader, as a mentor, to people. He believes deeply in Goldman Sachs culture, and so he'll be another senior leader that can spend time with all of us, on the culture of Goldman Sachs. We have 4,000 people in Dallas, Texas now, and he adds, it puts another senior leader in Dallas, which is obviously very, very important for us. And he certainly has a view on the macro that our clients are going to want to hear. And so having Rob coordinated with our research team and available to talk to our clients about what we see going on in the macro is another area where we can contribute. So we're thrilled to have Rob back as a senior statesman at the firm, and excited that he was excited to come back to Goldman Sachs.
When I dial 1-800-GOLDMAN for the Fed call, do I call Jan Hatzius or Mr. Kaplan?
You call Jan Hatzius.
I keep calling Jan.
He's our lead economist, but Rob is certainly somebody you should call too. And by the way, I'd be happy to give you opinions on that also, as would John Waldron and 40 other partners.
How big is the range of opinions right now?
The range of opinions, we have a research opinion, but the range of opinions, it's one of debate. I think one of the things I feel so lucky, there's so many smart partners at Goldman Sachs that are out in the world talking to people. And as you do that, you learn, you bring perspectives to the table, and all those perspectives kind of go into the, into the mindset factory. Jan Hatzius is really, really good at taking data and information and digesting it. And he sits in a very powerful place inside Goldman Sachs, and all of us contribute to that information flow. And so I think that's one of the advantages of the firm. We have a great ability to kind of listen and learn and talk to very smart people, and that gets incorporated into our views.
We'll get a ton of information this week. We get CPI, we get retail sales, a bit more data, tons more Fed speak. Can we finish on what the business is telling you about the state of the U.S. economy? We're trying to gauge if we're slowing down, falling off a cliff, or booming.
Well, we're definitely not falling off a cliff. I think the U.S. economy is chugging along pretty well. I think the market is set up for pretty much what you see now is what you'll get throughout the rest of 2024. There have been a bunch of data points that indicate a slowing in what I'd call the bottom 25 or 30% of the consumer economy, where people are making different choices and starting to tighten up on some of their spending choices. You've seen some earnings reports in the last few weeks that indicate that. But broadly speaking, the service sector is still relatively strong, and I think the economy is still in pretty good shape. Where it'll be in 6 months, how much of that slowdown we see in the bottom quartile, we have to watch the data very, very carefully.
Just a final question. We alluded to it in a conversation a little bit earlier. Do you feel personally vindicated about where the business is now versus some of the coverage the business got over the last 12 months?
Goldman Sachs is a visible organization. The team that I have that helps us, the broad partners that help us serve our clients, run the firm, move forward. We've had a high degree of confidence in our strategy over the last 5 to 6 years. We continue to execute on that strategy. When times are good, things feel good. When times are tougher, things don't feel as good. But we kind of take a long view, execute against that strategy, and we just know that if we have really, really smart people working together, working collaboratively, really driving for excellence to serve our clients, we're going to do just fine. And that's kind of true north. Serving our clients with excellence, we'll do just fine. And so we remain focused on that.
David Solomon, thank you very much for your time. We appreciate it.
Thank you for having
France.
me.
And we'll catch up in New York next time.
Absolutely.
All right, that was Goldman Sachs Group Chairman and CEO David Solomon speaking with our own Jonathan Ferro from Versailles in France. And not surprisingly, the conversation started off by just Mr. Solomon saying how important France is to Goldman Sachs, I guess due in part to Brexit and kind of the reallocation of some of the resources. But he also stepped back, Mr. Solomon did, in saying, from a macro level, the U.S. needs to deal with the debt, the deficits. Those are going to be issues that you can't keep brushing under the table. You also had some comments about the IPO market coming back. Had some good IPOs so far this year to date, but I'd like to see some more business going forward.
But then also talking about how the U.S. economy is chugging along and in pretty good shape. So it sort of dovetails with a lot of the data. The soft data, though, continues to come in lighter and lighter, which is interesting. And the hard data continues to do really well. And the funny thing is, of course, CEOs feel good. They feel good about corporate profits. Small businesses don't feel that good. They don't feel that great about corporate profits and demand and labor and inflation.
And we'll hear some from some of the big retailers this week in terms of their earnings, including Walmart. So that'll give us a good feel for the U.S. consumer. Right now, let's go to Mr. John Tucker. Let's see what's going on in the world. John, what do you have for us?
All right, let's go to Lower Manhattan. The star prosecution witness in Donald Trump's hush money trial, Michael Cohen, on the stand this morning, offering testimony could help shape the outcome of the first criminal case against an American president. Cohen, Trump's former lawyer and personal fixer, by far the Manhattan DA's most important witness in the case. His appearance signals that the trial may be entering its final stretch. Prosecutors say they may wrap up their presentation of evidence by the end of the week. Secretary of State Anthony Blinken says Israel risk is fueling a Hamas insurgency in post-war Gaza, cautioning that there will still be thousands of armed militants in the area, even if Israel invades the city of Rafah. Blinken says the U.S. is concerned about Israel's conduct of its Gaza offensive.
We've been working for many weeks on developing credible plans for security, for governance, for rebuilding. We haven't seen that come from Israel. We've been working with Arab countries and others on that plan.
Secretary Blinken making his comments on CBS's Face the Nation, heard Sundays on Bloomberg. Thousands of residents from a Canadian town being urged to evacuate amid a fast-growing wildfire that's resulted in poor air quality and reduced visibility In April, Canadian officials warned the country could face another catastrophic wildfire season after last year's historic fires. And finally, a curator at the American Museum of Natural History has been detained in Istanbul, Turkey, while allegedly attempting to smuggle spider and scorpion samples. The curator says he had permits from the government to conduct his research. Lorenzo Pradini, an expert on arachnids at the New York-based museum, was held by police at Istanbul airport while allegedly trying to take about 1,500 samples out of the country.
Can't do that.
You can't take spiders out of a country. Why not?
No.
Yeah, you can have them.
You can't take a cat from here to the UK without a thingamajiggy.
Why would you want to keep your spiders? Global news. That's like telling St. Patrick, no, you can't take the snakes out of Ireland. Global news. 24 hours a poll explain it. Whatever you want it with Bloomberg News Now. I'm John Tucker, and this is Bloomberg. Paul and Alex.
I'm Alex Steele alongside Paul Sweeney. And I have really, guys, the only story that we care about right now, okay? So apparently, 150 Bavarian men came together Sunday to compete in Germany's unique national championship of Fingerhakeln, or finger wrestling.
Finger wrestling?
These finger wrestlers met in a big beer tent in the small southern
Was there
village.
any drinking involved in this?
Of course. Around 1,000 visitors cheered on the all-male contestants as they gulped down their national beer and world-famous sausages. This comes from the AP, Associated Press. Thank you for the best story I read all day. In each round, 2 competitors sit on opposite sides of a solid table and hooks one finger, usually a middle finger, through opposite sides of a small leather loop. As soon as a referee signals the start, the contestant tries to pull the other away from the table quickly. And apparently this is a long-time tradition of how they settle disputes.
Finger wrestling, a well-known competitive sport in Germany's Alpine region and neighboring Austria, originated as a way to settle disputes. I wonder if I can see Matt Miller over in Germany after a couple of steins getting into some...
They use their middle finger?
Wrestling. Yes, I'm looking at the photos here. These people...
These are amazing.
We do that in New Jersey, too, to settle disputes.
You're not competing against each other through strength of that middle finger.
Oh, that looks like fun.
I mean, this is amazing. I definitely want everyone to go to the AP and check out this article because it's by far the best thing I've seen all day. You're basically on a chair and you're pulling and I mean, you gotta have really strong fingers for that.
Yeah, and they're wearing all the traditional German garb, whatever that is, the lederhosen.
Yeah, sure.
Cool. All right, excellent. That's what they do in Germany. So
great.
All right, I'm all
happy.
in on that.
Congrats, you guys. This, good job.
S&P 500 up a couple of points here. Really no change, no movement there. The Nasdaq up about 0.25%. So a little bit of green on the screen. Not much happening with the indexes. We're going to have more coming up. This is Bloomberg. Good morning.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been the U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are 2 big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, coming up in this hour, lots happening. We're going to check in with Alon Olsha, Bloomberg Intelligence Senior Metals and Mining Analyst. Apparently, BHP says Anglo American has rejected its revised proposal. I thought we were going to get an M&A trade there in the metal space, but they're fighting back. Also, we're going to listen into a conversation I had with last week with Sesh Iyer, North America co-chair of the Boston Consulting Group. We're talking about AI and how their clients are dealing with AI. They're making big investments there. Dryden Pence, CIO at Pence Wealth Management, also going to join us, give her thoughts on these markets. But let's kick things off at this 11 o'clock hour. The man behind the pole. Nobody knows what we mean by that except us here in the studio.
He's literally
Charlie
behind
Pollack.
a pole, in case you can figure that out.
Thank you very much. Here's what's going on. Stocks are advancing. The Dow, the S&P, NASDAQ, all moving higher right now. Little change on the S&P, but still up 3 points, up less than 0.1%. This update brought to you by BNY Mellon Insight, June 4th to the 6th in Nashville, Tennessee. Don't miss the essential event for the financial advisor. advice community. Visit insight.bnymellon.com. Stocks are wavering at the start of a week that will bring inflation data seen as key in shaping the outlook for Federal Reserve policy. Yes, the CPI report, but also the PPI report and retail sales. Right now, the S&P higher by less than 0.1%. The Dow up 40, up 0.1. NASDAQ up 47. That is a gain of 0.3. 10-year, 4.47%, with a 2-year, 4.84%. Gold down $18 the ounce now, down 0.8%. $23.41 for an ounce of the precious metal, while West Texas Intermediate crude up 1%, $79.03 for a barrel of WTI. Goldman Sachs Chairman and CEO David Solomon just wrapping up a wide-ranging interview from Paris on Bloomberg Radio. He talked about a number of topics, including the deal-making environment.
I think there's no question that the regulatory environment has been a headwind to M&A activity. I'd say, for example, large cap tech is kind of closed out because of the regulatory environment for making significant acquisitions. And I do think the regulatory environment has made it harder to understand or really expect exactly how it will intervene. And so I think that's had a chilling effect.
And Solomon told our Jonathan Farrow the IPO market has opened up, does expect activity to pick up, also says the bank does have room to grow in asset and wealth management. Goldman Sachs shares, they're advancing now up by about 0.2%. Again, recapping, stocks are higher, S&P, little change right now, up by 1 point. I'm Charlie Pellet behind the poll, and that is a Bloomberg Business Flash.
All right, thanks so much, Charlie Pellet. I'm Alex Steele alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We bring you all the top news and analysis from our great analysts that cover 2,000 companies and 130 industries worldwide. And just to be clear for our radio listeners, we basically are in a radio studio, and there is a poll, and Charlie Pellet does his work from behind that poll, just so we're all clear.
Yeah, he's got his own little gig going on.
He has his own thing, and then he leaves. He doesn't sit with us like John Tucker. It's very upsetting. Alexandra Semenova is also sitting with us, which we like. She's from Bloomberg News. She's looking at some of the movers here. All right, what's on your radar? Tell me it's GameStop. Tell me it's GameStop.
Hey guys, Alex, it is GameStop. We cannot not start with that story. Obviously, the biggest stock story of the day. Shares are up about 70% right now, but that's far below the move of as much as 120% earlier in the day. It feels like 2021 all over again. This is, of course, on speculation around a return to social media by Keith Gill, better known as Roaring Kitty, who, of course, drove the meme stock rally back in 2021. Last night on X, he posted a drawing of a man leaning forward with what looks like a video game controller. So some traders are now speculating that means that he's going to be active again after a 3-year hiatus, and that's making the stock go bonkers right now.
I mean, we had seen some short interest ticking up a little bit, so you could see some short covering in there. But there's nothing I don't love about this story.
No, and it's not just that one. It's also AMC got a lot of interest today. It's another meme stock. That one's up 30% here today. So the meme stocks seem to be having a little breath of life here, which I don't know what that means. I don't care about them individually. I just care about, does that signal anything about the market? Are we getting a little too frenetic here? Is it a frothy market, or is it just a couple of knuckleheads?
Well, I thought that that the narrative was like everyone had their pandemic checks and that's what they were trading and they're working from home, right? But so is that still the narrative, or is the narrative like you have less of that money, you're back in the office, but maybe you do a little bit on the side, and that narrative is a little less exciting?
Yeah, people probably trying to reignite and replicate the enthusiasm, but we'll have to see how far it goes.
So my claim to fame for GameStop is in the movie about GameStop, they took a clip from me on Bloomberg Television.
Really?
I have heard, I haven't seen it.
Alex.
And I ad-libbed this on television, that GameStop, that stock won't stop, which I guarantee you I could never have said if that was in the prompter. And I'm like, dude.
Where it was used in what?
In the movie about GameStop. What was it called again?
Dumb Money.
Little Money? Dumb Money, Little Money. Dumb Money.
Really good film, actually.
Got it.
Yeah, and
really?
You can
have
see
you been in a GameStop? Ever been in a GameStop store?
Sure, like in the 80s.
Yeah.
Yeah, it's just like, I don't get it.
Yeah, well,
that's the point. There's
nothing to get.
Yeah, that is the point.
Yeah.
Okay.
All right, Alex, what else are you watching?
I am also looking at Apple about 1.6% right now. This is after reports that the company is closing an agreement to use OpenAI's technology on the iPhone. Apparently, the two sides are finalizing terms for a pact to use ChatGPT features on the next iPhone mobile operating system. Wedbush said that inking this partnership with OpenAI opens a myriad of paths and revenue opportunities opportunities on the services front. Of course, Apple had been one of the Mag 7 stocks that isn't really talking much about artificial intelligence. So this could maybe give it a nice boost after a challenging start to the year.
All right, anything else?
And sticking with chips and AI again, Intel is also in talks with Apollo Global Management over a deal that would have the investment firm provide more than $11 billion to Intel in funding for a chip manufacturing plant in Ireland. This is according to a report from the Wall Street Journal. The two companies are apparently in exclusive talks and could reach an agreement in the coming week. So that's boding well for Intel.
All right, Alex, thank you so much. We appreciate that. As always, Alexandra Semenova. She covers all the equities for Bloomberg News, joining us here in our Bloomberg Interactive Broker Studio. An M&A trade might be on the blocks, on the rocks here. Anglo American rebuffed a sweetened takeover offer from BHP Group that valued at about $43 billion US, leaving it up to the Australian miner to make a better bid or lose out on what could be the industry's biggest deal in a decade. Let's bring in an expert on this stuff. Alon Olsha, Bloomberg Intelligence Senior Metals and Mining Analyst. He joins us from London. I did not hire him. He's a recent
okay,
hire,
good to know.
We'll check him out here. Alon, what do you got for us? What's going on in the global mining space these days with these names?
Look, everyone's looking for copper is the most coveted metal out there in the mining industry. It's in short supply. It's expensive to build new mines. It's risky to build new mines, and demand is set to climb significantly because of applications around the energy transition. So miners are looking for opportunities to grow exposure, and that's one of the main reasons BHP's gone after Anglo American, which Anglo American's been around for a while. They've got a bunch of assets in there, not just copper. But it's always been a difficult business to buy because there's some assets in there that are problematic, that are unwanted. They've effectively served as poison pills for a takeover. But BHP's now come with this bid. It's structured in an interesting way. They're basically saying, we'll buy you, but you need to demerge some of your South African assets, spin them off to your shareholders, and we'll pick up the rest.
And that therein lies the problem. Like, that's why no one really wants that for Anglo American, right? Because they're saying, you go spin this off, then we'll buy the rest of your company. Why don't they just buy the whole company and then sell it off?
Yeah, you're absolutely right. It's one of the reasons shareholders don't seem to like it. It's a complicated structure. It basically introduces a whole lot of risk for those shareholders that'll be inheriting these assets, execution risk, value risk. But for BHP, it's also a headache that they don't want to absorb themselves. They don't want to take it on. They effectively would be taking on potentially the value trap that has been plaguing Anglo American for so many years. So, and remember, BHP kind of has withdrawn from South Africa. BHP was, until not so recently, BHP Billiton, and that was an acquisition of a business, a merger with a business that had a huge South African presence, and then they spun it off in South 32. So there goes a South African asset. So they don't really want to be there, and it's kind of understandable. South Africa is a difficult place to operate at the moment.
But you're South African.
So for them,
you're South African.
Well, I know. I do feel bad saying it, but it's the truth. It's the truth, and we speak the truth in Bloomberg Intelligence.
There you go.
Nice one.
So I think it's a tough one for them to get their head around.
I think that, in essence, what this just also boils down to is the money made in discovering new copper assets is minimal. Like, the hurdle rate's really high. So the way to do that is you have to buy competitors. It's very difficult to get the kind of scale, right? Building a mine's really hard. There are a lot of different labor laws in different countries. Look what happened in South America, while all of a sudden, like, mining just was like, no, what, we're good. Like, you can't take any copper out of here. I think that was in Peru. Does that just speak to that problem? And what's the other solution to that? The geopolitical risk premium for copper is a very different proposition than I feel like it's been the last few decades.
Yeah, that's absolutely right. I mean, geopolitics has made things more difficult, but it's not really new. It's been a bit of a slow burn issue. It's also, the reality is, geologically, it's tough to find the deposits that are close to surface in really high grades, and those deposits tend not to be in the US or Australia. They tend to be in some tougher jurisdictions like the Congo, the DRC, or in Argentina, which is politically seems to be always in flux. So if you want to go after these assets, you want to build exposure and build these mines, you need to take on that risk. And as you say, the hurdle rate is very high. And at current copper prices, it probably starts to make sense. But just a few months ago, before kind of the resurgence we'd seen when copper was trading, $8,500 a ton, miners just couldn't make the economics work. Now it's a little bit easier at close to $10,000 a ton, but even still, then there's questions as to how sustainable that price is in the near term.
So, Elon, I'm just putting on my investment banker cap here. I think Anglo American's got a great position. They don't have to do anything, and they don't. If I were them, I'd be like, no, if you guys want us, buy the whole thing, and then you deal with it. Pay me a premium, or I'll just stay with my copper here. I mean, there's really no reason for Anglo to cave in here, right?
Yeah, that seems to be the way they're going for the time being, but there is a lot of pressure on Anglo American. So at the end of last year, they came out with an investor update. Anglo American, before the end of last year, before December, was the go-to play in the mining space for growth. They had a great growth profile. They had good projects. They had been investing through the cycle, so growth was coming in at the right point in the cycle when most of their peers had pulled back and had a bit of a growth gap. Then came December last year, investor update, and they slashed guidance across the board. Share price was decimated, and that's why we're in the position that we're in now. And it's shaken the credibility, it's shaken the confidence of investors in the credibility of management. So, yes, they can reject this bid, but the onus is then to come up with a credible strategy to unlock the value in the stock. And that's probably actually going to happen tomorrow in some way, shape, or form, where they said they are coming out with their standalone strategy. So that'll be really interesting to watch.
All right, we'll circle back with you and see what the market thinks about that. Elon Olsha, he's a senior metals and mining analyst at Bloomberg Intelligence in London, the pride of South Africa, although it's tough to be a miner. So I didn't know you knew all about the mining stuff too. You're just like the global energy space.
You didn't know that?
No.
I'll explain you that too, for sure. I started in gold.
You started in gold?
Then I went to copper, then I went to oil.
All right, very good stuff. You learn stuff every day here. All right, last week I was visiting our good friends at Boston Consulting Group, BCG, up in Boston. I attended the Boston Consulting Group Edge Expo in Boston. I had a lot of great conversations with executives at BCG. One was with Sesha Iyer, North American co-chair. He focuses on helping clients think through the levels of value for new artificial intelligence and the role of AI moving forward. I began by asking him to tell us what he thinks AI is today. Let's listen.
So we are really looking at how we can really leverage technology, and when we say intelligence, being able to really interpret data, apply data to really drive change, to create value inside of organizations. It's how do you take the data, apply it against processes to really get rounds of value around either productivity, around cost, around top line, around customer impact, around customer intimacy and delight. So how do you essentially use data to generate that insight? So in a simple way, that's what AI is about. A lot that we are clearly observing right now is also not just predictive AI, which has been around for a long time, but the emergence of generative AI that then adds, four specific things. The first is the synthesis of information and large reams of information. How do you synthesize and get the right information in the right construct to the right person? There's a lot around generation. We actually can generate not only text, but we can generate voice, we can generate videos. The third is it's very conversational, right? So you can actually engage with very low friction. And then the last is it has the ability to reason. So it can actually have a good dialogue with you. So we are starting to see these additional attributes in Gen AI that are actually bringing a lot more value front and center.
It's interesting. I think there was, Bloomberg ran a story a quarter or two ago. Every company in the S&P 500 on their earnings conference call mentioned AI. It has come out of nowhere. How receptive are your clients to discussing AI, making the investments in AI, whether that's upping their technology budget, reallocating their technology budget? How do those discussions go?
So we did a survey earlier this year. We are clearly seeing 70% of execs increasing their spend. And then within that 70%, we are seeing 50% of execs say that Gen AI is going to be a top priority. So we are clearly seeing more investments going against leveraging this to deliver to value. Now, that being said, the other thing that we are also observing is there's only 1 in 10 executives or companies that are truly pioneers.
Okay.
Right? The other 9 in 10 are, I would say, doing a wait and watch. But what we're really observing that are amazing characteristics in these pioneers, one is they are massively ambitious. They truly see the potential of the technology. They want to get the value from it. They're investing in it. They're very business value driven. That's one. And their ambition, what we observe is anyway 1.3 to 1.5 times the ambition of the folks who are not investing. The second is we clearly see upskilling and reskilling to be center of their focus. 46% of people will need to be reskilled.
That's a big number.
It's a big number. It's a big number in organizations. You think about organizations that are 50,000, 100,000 people. You're talking about thousands and thousands of people that need to be reskilled. Also related to that are senior executives. 60% of senior executives need to be upskilled, so they know how to be good sponsors to actually apply the technology. The third thing is intimately understanding costs. I mean, many folks understand direct costs. Indirect costs are still not fully in the equation, so understanding the cost profile of what this takes, not only on the build, but also once you deploy to operate it. The fourth is partnerships. Are you truly engaging the right partners in your ecosystem? Because this is not a one-partner solve. This is a multi-partner solve. And then the last thing is, which is very important to us at BCG, is leading with responsible AI. You can apply the technology. There are a lot of downsides to it. How do you put the right controls in place?
If you come into my office, or when you come into my office and really make the case that I need to invest in AI, I'm going to ask you, okay, but is it going to make me better? Is it going to make me more efficient? Because I'm going to have to up my tech budget. You just explained to me how I'm probably going to need to up my tech budget over a long period of time. What's the payoff for me from a P&L perspective? Can you make that ROI case?
Yeah. So there are 3 pathways to value that we observe. The first is what we call deploy, where existing solutions already have Gen AI features. So if you think about Office 365 Pilot, or you think about GitHub Copilot, or you think about Zoom, the video application that can, generate a transcript from a call, it's turning on those features. And you can start to see value that's 10 to 20% there. The second pathway is what we call reshape, which is driving end-to-end transformations of specific functions. You think about the marketing function, you think about the finance function, or you think about the customer service function, or let's say the underwriting process in an insurance company. That's 30 to 50% in terms of not just productivity unlock, but in terms of speed of performance, in terms of value delivery that happens to the customer that's at the end of that process. And then the third thing that we're observing is what we call invent, where it's completely new business models. So you think about creating a new beauty assistant, or you think about creating new molecules. We recently, on the invent side, we have now done a longitudinal study where AI-generated molecules have 2 times the success coming out of clinical phase 1 trials compared to molecules that were created in the lab. That's amazing,
it is,
right? And you think about ROI there. I mean, the ROI is so obvious. So we are seeing specific sectors and specific functions really go through massive change.
I think most people, as they come up the AI curve and just understanding, are concerned about responsible use of AI, the risk to AI. Will AI take over the world? Will the machines take over the world? How do you frame that risk out, and what do you suggest to your clients?
So one of the things we tell our clients is clearly there's so much of value when you adopt this technology, but you have to do it in a really responsible way. So what is your responsible AI framework to put against it? What is your responsible AI strategy? How do you really think about responsible AI governance? What are your lines of defense? How do you actually implement the right structures in place? When you think about processes, your product development process or your portfolio monitoring process, how are you really including responsible AI in it? For example, when you're building Gen AI solutions that have LLMs in the middle of it, are you really doing proper verification and validation to ensure that LLMs perform to your objective function and they don't start doing something you don't want it to do? Do you have things in place for that? So there are a number of these different pieces of the entire responsible AI framework. So we have a comprehensive framework. We lead with that at our clients. And it is a capability build. So just like you have a capability build around risk and compliance, there is now a capability build around responsible AI.
All right, that was my conversation with Sesh Iyer. He's a North American co-chair of the Boston Consulting Group, talking about AI. We were up at their Expo conference up in Boston last week. I'll tell you, AI, it was front and center as BCG talks to their clients. That's what the CEOs want to talk about. They want strategy about how to invest and when to invest and how much to invest. So it was good to check in with some of the smart folks at BCG. Right now, let's check in with another smart person. Charlie Pellet's got a Bloomberg Business Flash for us.
Thank you very much, Paul Sweeney. And here's what's going on. We're looking at another update for the U.S. stock market. After 3 up weeks, this month's advance is putting the S&P close to erasing its April slide, up now by 2 points, gain there of less than 0.1%. The Dow up 0.1%. We've got NASDAQ up 0.2%. 10-year 4.48%, with a 2-year that's yielding 4.84%. Gold down $23 the ounce, lower now by 1%. 23.37. West Texas Intermediate crude up 0.9%, 78.99 a barrel. A story we've been telling you about right here on Bloomberg Intelligence in the mining industry. BHP Group says Anglo American has rebuffed an improved offer it made, which said it valued the company at $43 billion. BHP up by 0.4%. Anglo American, the ADR, is down 1.6%. Recapping, S&P up 1 point, up less than 0.1%. And that is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you very much. I'm Alex Steele, alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We cover all the top news in finance and economics with our analysts worldwide. They cover 2,000 companies in 130 industries. We also get the best and the brightest to come into the Bloomberg studio on a Monday and give us their take on the markets. And for that, we go to Dryden Pence, CIO at Pence Wealth Management. Now, typically, Dryden, you're in California.
That's correct.
So, you know, why are you here? This is not fun for you. Good for us.
Well, yeah, every now I come to New York about once a quarter. We have a lot of folks in this area, and so it's good to come here. So I'm really happy to be here today. Thank you for having me.
We welcomed you yesterday with rain and coldness, so you're welcome on that point. So there was a great piece in the Bloomberg that talked about how S&P 500 companies are on track to post their best quarterly earnings relative to expectations in at least 2 years because nothing disastrous happened. We didn't get that recession. And this dovetails with your note saying that this year has been much ado about nothing.
It is. I mean, people kind of dance on the head of the Fed's pen, but I mean, the point is that if you look at basic earnings, you know, we're probably going to have record earnings across the S&P 500, and we started off with the Magnificent Seven leading the market, but now the rest of them are beginning to catch up, and I think that we're going to see this 493 continue to spread out and go, and the earnings are going to. It's basically the beat goes on every time we come. The beat goes on.
What's the pin on your lapel? The people on radio can't see it, but what's the pin on your lapel?
That's a Bronze Star.
Bronze Star, U.S. Army.
That's correct.
Thank you for your service, my friend.
Thank you for paying your taxes.
Yeah, exactly. That's what I'm good at. You don't want me in a foxhole. You want me writing a check.
You will write those checks.
That's how I can help out the.
Hey, you buy body armor, and that saves soldiers' lives. So thank you very much.
All right. Talk to us about this earnings cycle. We're just kind of getting through. We'll hear from some of the retailers here. Anything that kind of knocked you off your game one way or the other from this earnings cycle?
Well, in the earnings cycle, of course, we've got Walmart coming up at the end of the week here. But I think that what we're seeing is that consumers are continuing to spend. And that's beginning to transfer into earnings. Everybody, lowered their expectations and kind of put them down. And so we're coming in this thing. It's an easy beat cycle, and we continue to do that. But wages are at an all-time high. Earnings are at an all-time high. We've got more people working than ever before, and that drives consumers. And if you give an American consumer money, they're going to spend it. So I think that we're continuing to see that across retail. We're continuing to see that. But people break up. You have a certain amount of trade downs. When we mentioned the Walmart piece of it, is that the largest, fastest growing group of Walmart shoppers are folks that make over $100,000 a year.
Really?
And and then they get in there. They get in there because they come for groceries. Inflation has kicked up groceries quite a bit. People feel that. They go in, and then so there really is an opportunity for continued increase in market share. And so you kind of get then you get the aspirational side because you have the very high end is doing well. I mean, gosh. 20%. I mean, 40% of consumer spending is done by the top 20% of the population. So
And Torsten Slog had a great chart out, and he kind of recycles this chart every once in a while over at Apollo, and it's basically those that have either no mortgage on their home or have a mortgage below 4%, which to that point just frees up all that cash.
Exactly. If your mortgage is at if you have a 30-year mortgage at 4%, you don't really worry too much about mortgages going to 7 or 8%. Now, if you're a millennial trying to be a first-time home buyer, your brain's going to explode. But for everybody else, it's really not as big an issue.
One of the names on your list is really interesting to me, which is Apple, because for the first time in a collective memory of a lot of investors, there's some serious and fundamental headwinds for Apple, and if you boil it down to one word, it's China. How do you guys get comfortable with that?
We get comfortable. I think people underestimate the massive size of Apple. If you take a look at the App Store, that's an environment of 2.2 billion active users. Yeah. They've got 2.2 billion active devices that are out there. So that's 900 million people more than the entire population of China. Right. So sometimes when you think, okay, it's a China story, now it's a global story. You know, if you take a look at the App Store, the total merchandise value that's traded on that is over $1.1 trillion. It's bigger than the Netherlands.
Yep.
So it's amazing how big it really is.
So, I mean, I guess the issue there for Apple is, you know, it's can they manage around China, number one, and I think there are a lot of people that are on both sides of that. And then number two, what is their AI strategy again? Do you think they're a tech company that has to have an AI strategy? Because they don't really at the moment.
I don't know. I think they have the luxury, but because they're so big, they have the luxury to take a little time to make sure it's right. I mean, Apple doesn't make many mistakes, and I think that you know they're really, to use military parlance, they're really about ready, aim, fire. And so I think rather than jump into just anything AI, they want to get it right. And I think that's why people trust that brand. They trust equipment. They trust all those things. So, the fact that they're not rushing in to be the exact leader on integration of AI means that they're going to try to get it right. And I think that that's going to be important.
Well, you mentioned Walmart earlier. We talked about that. What about Amazon? Why do you own a stock like Amazon?
Amazon gets about, 40 cents out of every dollar, 4 out of 10, of everything online. And so when you think about how massively large that is, and we have a consumer that's moving more and more online, if you move from, right now we're doing like 15% of retail is online, if they move to 25, which is kind of where most of the world is going, that's a $300 billion opportunity that Amazon has. And so as behavior changes and behavior moves more and more online, you're going to see greater use of Amazon. And one thing that we have to think about is on this inflation cycle, and even if you look at inflation and people being price conscious and things like that, the most efficient way to bargain shop is online.
Oh, you're preaching to the choir. I mean, please.
And there you go. So it's just going to increase utilization of that platform. They're so dominant. And so I think that we find that long term, if we're thinking about this, that they're going to overcome whatever headwinds people are trying to imagine that they have.
One of the many reasons we like hearing from Walmart, and we will this week, is just it gives us a good read on the consumer. It feels like a broad-based read on the consumer. How do you view the consumer here? Because there's definitely some cracks out there for a lot of folks.
I think that when we talked about early on this trade down, right? If you break the consumer up into three groups, you have the top tier, the middle tier, and then the lower tier. The lower tier, inflation is showing up, and it's beginning to change some of their behavior. People having to pay more attention to pricing and things like that. They're going to move into more frequency of a Walmart or any of the discounters. But then when you take a look at that middle group, like I mentioned before, that trade down, where now because grocery prices are so high, people are going to move in there for grocery, and the next thing you know, they look at the rest of the store. And you hear it all the time. When people say, I can't find it anywhere else, so I went to Walmart. Mm-hmm. And so I think that we're going to continue to see increased traffic, and that's going to translate to increased growth and utilization.
So, but to the Amazon story, you're definitely buying it as a retail story, not as like a cloud play or an AI play. Is that just pony on a cake? What is that? Icing on a cake? I don't want a pony on my cake.
You don't want a pony on your cake. That could be a problem. But I think that
pony.
I think that it is. Amazon it's got the cloud, of course. And that's just going to continue to grow as we go through all this demand and AI and those things. But when we really kind of think about the consumer, because that's, what are people doing? That's a very solid growth story. And it's a behavior story of the American consumer. And I think that it's one that we really need to pay attention to. Because remember, too, that pricing online has kind of gone down over the past 10 years, whereas CPI and everywhere else has gone up. So you get better competitive pricing online, better competitive pricing in an inflationary environment, and that's just going to continue to play right into that ecosystem that is part of. I've yet to find. I very rarely find somebody who hasn't bought something on Amazon.
Yep.
Yeah. And it just continues.
Yep, absolutely. And we'll hear from Amazon Thursday when we report their earnings. Walmart Thursday. Dryden Pence, thank you so much for joining us. Dryden Pence, he is the Chief Investment Officer at Pence Wealth Management, based out there in Newport Beach, California, joining us here in our Bloomberg Interactive Broker Studio. Do you think he came all the way to New York just to see us?
Obviously. Who doesn't, right?
I mean,
why,
of course.
Yeah,
exactly.
Okay. That's a good answer. It's a very good answer.
All right, we got nothing. I mean, nothing going on in these markets. S&P 500 unched, Dow unched, NASDAQ up about 0.2%. Let's go look at the yield space. 10-year Treasury in about 1 basis point, 4.48% on your 10-year. The 2 years 4.84%. Remember, we were at 5% not too long ago. I'm going to call out WTI crude oil because I think some folks are interested in that kind of stuff. It's up about 0.75%, $78.80. So kind of holding below this $80 per barrel level. Bitcoin, it is up 2.8%, $63,000 even for Bitcoin. A long way from that recent high of 73 that was kind of fueled in part by those spot ETFs that were hitting the market several months ago. All right, we're going to have more coming up. This is Bloomberg with our news in New York City. Here's John Tucker.
Yeah, in for Michael Barr. I know it's confusing even to me. Anyway, Donald Trump's former lawyer and fixer, Michael Cohen, now on the witness stand in the former president's fraud and conspiracy trial here in New York. Cohen telling the jury he left the law firm where he was working to become special counsel at the Trump Organization in 2007. He's talking about how he recorded a conversation with Trump on his iPhone, putting the phone on voice memo, walking into Trump's office, keeping the phone in his hand as he recorded conversations. And not far from that courthouse, for the second time in a decade, Senator Bob Menendez faces a corruption trial, this one kicking off this morning with his political career and freedom on the line. More from Bloomberg's Denise Pellegrini.
Prosecutors are expected to invoke images of gold bars and cash. The 70-year-old New Jersey Democrat and his wife accused of accepting bribes from 3 wealthy businessmen in his home state and performing a variety of favors in return, including allegedly meddling in criminal investigations and taking actions benefiting the governments of Egypt and Qatar. Menendez's lawyers say he's stayed within the rules and did nothing illegal. Menendez has optimistically spoken about mounting a re-election campaign this summer if he's acquitted. Denise Pellegrini, Bloomberg Radio.
Secretary of State Anthony Blinken delivering some of the Biden administration's strongest public criticism yet of Israel's conduct of the war in Gaza. Blinken says Israel's tactics have meant a horrible loss of life of innocent civilians, but have failed to neutralize Hamas leaders.
They will be left holding the bag on an enduring insurgency because a lot of armed Hamas will be left, no matter what they do in Rafah. Or if they leave and get out of Gaza, as we believe they need to do, then you're going to have a vacuum, and a vacuum that's likely to be filled by chaos, by anarchy, and ultimately by Hamas again.
Secretary Blinken speaking on Face the Nation, heard Sundays on Bloomberg. Global news 24 hours a day, whenever you want it, with Bloomberg News Now. I'm John Tucker.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:40 on Wall Street. We do check markets all day long at Bloomberg. S&P now lower. This Bloomberg Business Flash brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with the solutions they need to grow a thriving business. Commonwealth, go where you grow. Visit commonwealth.com to learn more. Stocks are wavering at the start of the week that will bring inflation data, seen as key in shaping the outlook for Federal Reserve policy. The Dow, lower, little change, down 10 points, down less than 0.1%. S&P down 1 point. NASDAQ up 35, up by 0.2%. 10-year, 4.47%, with a 2-year that's yielding 4.84%. Spot gold now lower by $26 the ounce, down 1.1%. And West Texas Intermediate crude up 0.6%, 78.73 a barrel. All eyes will be on the producer price report out tomorrow ahead of April's inflation print, the CPI report on Wednesday. So how might this data play into rate cut expectations? Dara Maher is head of research Americas at HSB Securities USA.
Look, ultimately, I think we get a cut. We're looking for a cut in the second half of this year, but just one. I just don't see the CPI number being enough to change the Fed's perspective. The market changes on a dime. We've seen that like many times this year already. But for the Fed guidance, I think they'll stick with the idea that we've got to be patient.
And we're keeping an eye on GameStop shares. Meme stock mania back. GameStop up now by 62.3%. Again, recapping, S&P lower, down now by less than 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. I'm Alex Steele alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We bring you all the top financial and economic news through the lens of our Bloomberg Intelligence analysts. They cover 2,000 companies and 130 industries worldwide. And every Monday at this time, we dip into our Bloomberg NEF research team. So this is basically a research team that has the best data sets and models built by analysts and industry experts all around the world, and they cover everything commodity, power, transport, industry, buildings, ag related. And it's really on the cutting issues of our time, in my personal opinion, because you know how I like the whole green stuff, energy transition stuff. If you look at any report, they all quote the EV data that comes from Bloomberg NEF. And we have one of those individual analysts here with us now. Corey Cantor is being at Bloomberg NEF lead U.S. electric vehicle analyst. It's great to have you here, Corey. Thanks for joining us.
Great to be here, guys. Happy Monday.
Happy Monday. We made it. So you your latest note is about how Tesla's recent stumbles, not necessarily government policy or anything like that, but Tesla's recent stumbles creates a door opening for the other EV makers like a GM and a Rivian. Can you talk us through what your latest research says?
Yeah, so if you look at last quarter, both globally and within the U.S., Tesla hit a bit of a rough patch. You saw globally sales down about 9% year on year. And when you're looking at the EV space and the automotive space, year on year is usually the best way to take a look at this market to see how things are changing and growing. And so when it comes to GM, when it comes to Rivian, Hyundai, and even Lucid, there's just an opening here for them to expand their market share. Each of them has a different strategy as it pertains to 2024. And this doesn't mean that either of them are or any of them are gonna pass Tesla in this year. But from years working in the EV space, all you would hear is, we're always competing for number 2. We can never surpass Tesla. And whether you're looking at the kind of EV car space or even EV charging, the fact that Tesla has taken a step back, both in terms of where they're focusing their sales, as well as their EV charging network efforts, it means that other people, if they are able to step up, can make inroads.
It feels like after an initial surge over the last 5, 6, 7 years that there's been a lull in demand for EVs. And I don't know, A, do you believe that's the case? And B, why is that, do you think?
So last year we saw in the U.S. about 50% year-on-year growth for electric vehicles from 2022. So if anything, that was a really strong and successful year. We did begin to see some of the challenges around adoption as you move from that kind of early adopters phase to more of the mass market. And that's where consumers are going to be less patient with the technology and with the upfront cost, as well as charging infrastructure. And I think what makes the U.S. different than other regions like Europe and China is that charging really hasn't been figured out to the same extent. And the heavy reliance on Tesla means that when Tesla steps back from charging investments, lays off many of the supercharging network team, it means it's going to be more of a uncertainty for the consumer here. So data in the first quarter, we're finalizing. We've seen a lot of data come up. Outside of Tesla, other automakers like Ford, Hyundai, Rivian all did quite well, but GM, Volkswagen, and Tesla took a step back, and that has a big impact on the market in the first quarter. We'll see how Q2 goes.
We are looking down the barrel here this week of some tariffs that will be imposed on China EVs imports into the U.S. Just knowing what we know about how these car makers operate and look at losses per vehicle when it comes to EVs, what would be better for Rivian and GM? Like more competition to kind of light a fire, or less that gives them more time to do stuff?
Yeah, that's a really good question, Alex. I think everyone that you speak to in the automotive space knows that the Chinese EV makers are out there, your BYD, and other brands. I mean, we even saw Zeekr last week.
Yeah, go public, right?
Yeah, go public. And so the pressure should already be there. Tariffs, you're not seeing really too many Chinese EVs really imported into the U.S. Volvo and Polestar might be the exception. But really what those tariffs looks like, I want to keep an eye on the battery portion, because I think that could have more of an impact than the couple or the thousands of EVs from China specifically, given that the battery supply chain is still very heavily reliant on China, particularly for those lithium iron phosphate batteries, LFP, which is used to help bring down costs in electric vehicles. For GM, GM is competing in China already, so they have a good sense of how competitive that space is. And really there you're seeing great technology and upfront cost at a low level, which eventually you'll see here. I mean, if anything, maybe the tariffs help stem the gap a little bit, but if you fall behind and don't invest in electric vehicles now, we could be having the same conversation in 2 to 3 years with those Chinese automakers aiming to come to the U.S.
So do we have a sense that the U.S. OEMs, the Fords, the GMs, Stellantis of the world, have pulled back on their commitment to EVs, or maybe their timing of investments on EVs? Do you think that's happening?
I think the timing on investment in EVs is happening, right? In terms of their overall strategy, they've been, I think, approaching the market in a different way. Ford has been pushing towards this new EV platform that they're beginning to kind of produce in next year. GM, of course, has its Ultium platform. And for Stellantis, they don't actually have any fully electric vehicles here yet, although they have the highest selling plug-in hybrid electric vehicle, the Jeep Wrangler. A lot of this is on timing. But what I always like to say is that timing, and the investment is one thing, but you have to produce ultimately. And so if it's a delay of 6 months, a year, that's okay, but the cost of inaction gets higher. And if you really say, not just to the Chinese automakers, but other automakers like Honda and Kia really could make up a lot of ground here. And that's why there's such a big opportunity for Rivian to kind of step in. Ford and Tesla remain the number 1 and 2 EV makers here in the U.S., but they don't really have any near-term goals for 2024. And so when analysts are taking a look, trying to see what they're doing next, having a clear product roadmap could kind of clear up a lot of that uncertainty, and we don't have it right now.
When am I going to be able to buy a $16,000 EV that helps me go from here to the Berkshires without a charge?
You know what? I think there's a lot of interesting EV startups out there, and you seem pretty well attuned. I think we're going to see starting next year more EVs kind of coming down to the low $30,000 price point. The big question is how many of them are going to have that $7,500 tax credit, and of course, there's a lot of policy questions, and then an election this year that'll have an impact on that too.
My takeaway is not yet, Alex. Not yet.
Couple years.
Yeah. Corey,
There's
thanks
the
a lot.
Seagull. The Seagull is $10,000 bucks.
Now I'm going to look at this thing. All right.
Yeah, right?
It's, BYD's.
But that's the whole point. That's BYD.
Okay. Well,
That's Chinese.
Yeah, and that
think we can
car
buy that
is
stuff.
about $20,000 in Mexico, so the $10,000 I think is
Maybe not the price that I would be paying. Maybe a
only
little bit
one
more.
windshield wiper.
Huh.
How many do you need?
How does that work? I mean, to be fair, do the two really make a difference? Corey, thanks a lot. Corey Cantor, Bloomberg
look at
NEF,
it. It looks
lead
okay.
U.S. electric vehicle analyst. But if you put 100% tariff on that,
Yep.
how much is that going to cost me?
Yeah, that's not going to help.
But if I could get a
Still cheap.
$10,000 one, that can get me from here to the Berkshires with one charge, I would definitely consider something like that.
Yeah,
This is why the policy confuses
great in
me.
the snow up there in the Berkshires.
Oh, that's right. They're real cold.
Yeah.
All of a sudden, you have to walk home. Take you 17 days. It's just basically the batteries don't work that well in the cold. They got to figure that one out. All right, thanks a lot, Corey. Really appreciate that. This is all the pressing stuff that we get you here on Bloomberg Intelligence and Bloomberg NEF. Look at your market doing nothing. Go in May, go away. That is full stop. We do have some earnings coming out later on this week, and CPI, of course, on Wednesday. This is Bloomberg Intelligence Radio. Happy Monday.
Your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. The top U.S. auto safety regulator has opened an investigation into Zoox, that is the autonomous vehicle subsidiary of Amazon, after two incidents in which its SUVs suddenly braked and were rear-ended. David Solomon says he's encouraged by French leaders' efforts to make the country more friendly to business, as Goldman Sachs has tripled its Paris headcount in recent years. Our Jonathan Farrow sat down with Solomon at the Choose France Summit in Versailles, and he told us the IPO market is picking up.
I think there's no question that the regulatory environment has been a headwind to M&A activity. I'd say, for example, large cap tech is kind of closed out because of the regulatory environment for making significant acquisitions. And I do think the regulatory environment has made it harder to understand or really expect exactly how it will intervene. And so I think that's had a chilling effect.
GameStop shares now surging by 62.1%. They are rallying as speculation swirls around a return to social media by Keith Gill, who drove the meme stock mania of 2021 under the moniker Roaring Kitty. Apple is preparing to start selling the Vision Pro in markets outside the U.S., testing whether the $3,500 mixed reality headset has broader appeal. Sources say Apple has begun holding training sessions in recent days and has flown hundreds of employees from its international stores to Cupertino to learn how to demonstrate the device for customers. And those are some of the top company stories at this hour. I'm Charlie Pellet, and this is Bloomberg.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Happy Monday, everybody. We got up. We made it through that first day. I'm Alex Steele alongside Paul Sweeney. We're live from Interactive Broker Studio right here in Midtown Manhattan. Also check us out on YouTube. Let's go to John Tucker now for world and national news. John?
Paul and Alex, the star prosecution witness in Donald Trump's hush money trial, Michael Cohen, on the stand today, poised to offer testimony that could help shape the outcome of the first criminal case against an American president. Cohen, Trump's former lawyer and personal fixer, is by far the Manhattan DA's most important witness in the case. His appearance signals the trial entering its final stretch. Prosecutors say they may wrap up their presentation of evidence by the end of the week. The Secretary of State Antony Blinken says Israel risks fueling up Hamas insurgency in post-war Gaza, cautioning that there will still be thousands of armed militants in the area, even if Israel invades the city of Rafah. Blinken says the U.S. is concerned about Israel's conduct of its Gaza offensive.
We've been working for many weeks on developing credible plans for security, for governance, for rebuilding. We haven't seen that come from Israel. We've been working with Arab countries and others on that plan.
Well, Secretary Blinken making his comments on CBS's Face the Nation, heard Sundays on Bloomberg. Thousands of residents from a Canadian town being urged to evacuate amid a fast-growing wildfire. It's resulted in poor air quality, reduced visibility. In April, Canadian officials warned the country could face another catastrophic wildfire season after last year's historic fires. And Walt Disney's Kingdom of the Planet Apes took in $58.5 million to top the box office domestically this weekend, more than projections. The picture, which had been expected to open at $40 to $50 million, is Disney's first release of a new film in theaters this year. And finally, Jim Simons, the mathematician investor who created what many in finance consider the world's greatest money-making machine at his secretive Renaissance Technologies. He died on Friday. He was 86 years old. At Renaissance, located about 60 miles east of Manhattan on Long Island, he avoided employing Wall Street veterans, instead seeking out mathematicians and scientists. His technique was so successful, he became known as the Quant King. Over more than 3 decades, his returns consistently trounced markets. And that's to say nothing of his contributions to the mathematics department at Stony Brook, part of the State University of New York. Jim Simons was 86 years old. And we check the markets and everything else for you. Global news 24 hours a day, whenever you want it. With Bloomberg News Now, I'm John Tucker, and this is Bloomberg. Alex and Paul.
All right, John Tucker, thanks so much. That actually sets me up quite well for the conversations that I've been having over the last few weeks, consistently pretty much, and an op-ed in the FT today. This is by Martin Wolf, and he has a nice op-ed that talks about what life expectancy is. And today, the most common age in the UK, for example, is 87 years old.
Really?
Yes. Wow. And in 1965, the most common age of death was in the first year of life. And he sort of goes through and details it in different areas of the world, but just how much longer that life expectancy is, and how the idea that we go to school, we work, and we retire, and those are the 3 buckets, can't exist in the same way anymore.
Really?
So we have to go to school, we work a little bit. Maybe we take time off and go back to school. Then we work a little bit. Maybe we take time off and do something else. It has to be like a rolling change of society, because otherwise it's not sustainable. We can't retire with 40 years of life left.
No.
Is kind of his point.
I'm going to keep working.
Sure we can.
Yeah,
What are you
who's
talking
paying for
about?
that? No, but we're
What
going
you
to run
talking
out of the
about?
money, and it's also going to lean more for inequality. Like the richer you are, the more you get to do that. The poorer you are, the more you can't do that, and that's going to kind of widen the band of inequality worldwide.
So how do you? What's the solution?
So,
Changing the pension?
Die.
Well, yeah.
Yes.
Well, we have to kind of just reshift how we think about the stages in life that we have. Like reorganize education, work, pensions, welfare states, and health systems is sort of what he's saying. So you won't go to a university or receive training only as kids. that's going to be a lifelong activity, so you can change the jobs you have, because the job you have when you're 30 can't be the job that you have maybe when you're 60, and you maybe need school to do that, and there needs to be a different way of operating. I thought it was quite interesting.
Why would I want to change this job?
He's like, I've been doing this since I was 21, and I'm going to do it forever.
That's actually
true.
But it also means that education can't be, $100 grand a year, because, if you are rotating your career, you can't afford that either. So anyway, it was really thought-provoking.
Very good stuff. Very deep analysis
Thanks,
in the
man.
show. I like that. Very good.
Right on, dude.
Balance of Power. Joe Matthew, that starts right now.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
Today, we cut through the noise. Welcome to the fastest show in politics, with new polling out today that reinforces deep divisions in America. We seek context today through a series of important conversations, including Seth Kaplan, the author of Fragile Neighborhoods. He's with us in studio. We'll also hear from Bank of America CEO Brian Moynihan in a special Bloomberg simulcast. And next hour, a conversation with French President Emmanuel Macron. And yes, we'll also hit that new polling and, of course, update Donald Trump's criminal trial in New York with Michael Cohen on the stand. Our signature panel in place, Rick Davis and Jeannie Shanzano. And we start it all on Wall Street right now with a look at trading. Let's go to New York. Charlie Pellet for that. Hey, Charlie.
Well, hello there, Joe Matthew. And we're sort of in a holding pattern today ahead of key economic data. Yes, we get the PPI report tomorrow, but later in the week, CPI and also retail sales. And right now, little change for the U.S. stock market, wavering. Right now, the Dow is down half a point. S&P, I'm going to call that unchanged on the day, up by just about 1 point. We've got NASDAQ now up 46, a gain there of about 0.4%. 10-year, 4.48%, with a 2-year, 4.85%. Spot gold down $23 the ounce, down 1%. 23.36 on gold, while West Texas Intermediate crude oil up 1%, 79.04 for a barrel of WTI. GameStop, the big stock story today. We've got GameStop up now by 68%. GameStop surging as speculation swirls around a return to social media by Keith Gill. He drove the meme stock mania of 2021 under the moniker Roaring Kitty. Now, Katrina Dudley is investment strategist at Franklin Templeton Investments. And on Bloomberg Television this morning, she was asked what all of this says about sentiment.
For the first time in a long time, our views on the entirety of the market, particularly from a regional perspective, have actually converged. They're the least divergent. So stock stories like a GameStop, they're exciting to people. They drive that kind of single stock mentality. And in a world where things are much more kind of coalescing around a very good theme, people are looking for the stories. And I think that's what GameStop is, just a representation of that.
Franklin Templeton's Katrina Dudley, GameStop again up now by 69%. And sources tell Bloomberg Walgreens Boots Alliance is reaching out to potential buyers of the $8.8 billion Boots drugstore chain in the United Kingdom. Walgreens Boots Alliance up 4.7%. Balance of Power continues now. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie Pellet, thank you. Good to see you, Charlie. Hope you had a great weekend. Hope all the moms had a great Sunday. And welcome back to reality. I'm Joe Matthew in Washington on the fastest show in politics, live from Washington here on Bloomberg Radio, on the satellite, and on YouTube. And if we just take a second here to stop and listen and look around, we realize we're in the eye of the hurricane. Lawmakers aren't back till tomorrow. President's making his way back from Rehoboth Beach. And yes, I know there's a trial underway in New York, and we're going to get to that a little bit later on this hour with June Grasso and our panel. But we have an enormous opportunity here, and we're taking this opportunity for you to bring you a series of important conversations with thought leaders that bring context. That's what we promise here at Bloomberg, right? This is our chance today, before we get into the fray of breaking news and the divisions that surround us. Divisions, by the way, that are reinforced by an important series of polls today conducted by Siena College, along with the New York Times and the Philadelphia Inquirer. We'll get to some of this later on. because you've certainly heard the story before. Split down the middle is the story of America. And whether Joe Biden or Donald Trump win the election, it'll probably be by a couple of percentage points and will likely be decided by only a handful of states. And so we seek context in terms of how we got here and maybe find some solutions about how we get beyond this point with Seth Kaplan, who I've been looking forward to bringing you here on Bloomberg Radio and on YouTube, where you can find us right now for this conversation. Go to YouTube and search Bloomberg Global News. You'll find our live stream. Seth is a lecturer at Johns Hopkins University, and he's author of this book, Fragile Neighborhoods. An expert on fragile states, he brings it down to the zip code level, which apparently is where we find the truth in this conversation. Seth, it's great to see you. Welcome to Bloomberg.
Thank you, Joe. Pleasure to be here.
You've done remarkable work here, and in our sort of off-air conversations, at least, you've mapped out a very interesting look at things. You're in demand right now as author of this book in both red and blue states, red and blue capitals and towns and neighborhoods. You're all about social context. So when we look at the Siena poll or any of the others, Bloomberg will have its swing state poll out next week, and we see essentially two countries, two Americas. Are the answers at the hyper-local level?
I mean, I would say yes. I think we always need to remember, how is the average American experiencing life in this country? And I think there's a huge gap between what somebody in Kentucky and someone in Washington or someone in Ohio or someone in Michigan, some of these key states. And I think people's opinions about what's happening is, we talk about inflation and other material concerns, but I would tell you that to the extent that there's anger, to the extent that there's frustration, is because people don't feel the society and the economy is delivering for them at a hyper-local level.
Now, there are examples of where it is working, and you found in your research that it does not matter on levels of wealth or income necessarily. The zip codes that are working seem to have little to do with money.
I think if you look at the level of social connection, the abundance of local institutions, you can tell a lot about how people are experiencing life. When someone lives in a place and they don't know their neighbors, they don't have any local associations or local schools or local churches or local shops that they can have relationships with or they can join, I think you're experiencing life completely differently. And so when I look at my research, you certainly see a problem of what I would call spatial, place-based inequality, but economically, but there's also this great place-based inequality socially. We have economic poverty and we have a lot of social poverty that we never talk about.
But that's the part that you are talking about that's different here.
Yes.
So what do we need to learn when you wake up and see the poll of the day, as I keep pointing out here, and you see 49-51, here we go again, and everybody hates each other in Washington? We're lacking social nourishment on what level?
And what again, let's think about zip codes. Okay. Let's think lower than that. Let's think about neighborhoods.
Keep it local.
What are people actually experiencing? So I would be looking at, I mean, you can map it out. What places are doing well economically, which we all talk about, but I would also be asking what places are doing well socially. And you can look at some simple numbers, and I'm pretty certain you're going to find that people's attitude towards institutions, trust of politicians, feelings towards Washington, attitude towards the political candidates will very much depend upon not only some economic indicators we'll talk about, but very much about how they're experiencing life in their neighborhoods.
But let's define that level of social frustration. Is it because we're not going to church, we're not shopping in the same places, I'm not going out to the same restaurants on Saturday? What is the practical?
We can look at it many levels. It's churches, it's local businesses. Imagine you're in a place in which all the local businesses have closed and all you can do is go to a Walmart. And so you have no relationships with Walmart. You just have transactions. Imagine that there used to be a whole lots and lots of local institutions, like the Veterans Association and the Rotary Club.
Yes.
And now we have nothing. We have large nonprofits delivering services. So I used to be able to participate. We used to have lots of volunteering in this country. We have very little volunteering locally. We used to have a lot of local giving of your time and your resources. That's way down.
Is that a side effect, though? Or what's causing that drop in involvement?
I mean, I think there's so many causes. It's the changes in our careers and our ambitions. People seek out national goals. People don't seek out local goals. It's the changes in basically people going back a few generations. People would not have cars. You have cars. Right. You have careers. You have the nationalization of politics, the nationalization of business, to some extent, the nationalization of nonprofits. Even government is more centralized and local authorities have less influence.
That's why your work is so important to us here, because I keep hearing every day on this broadcast, and it's true, that all politics are national, that we're running national campaigns even for local office in this case, right? It's either MAGA or Biden or whatever the heck it is that you're going to put your label on that day. Did the shopping mall and the destruction of Main Street start all of this?
Well, I would say if you're asking about the frustration and the alienation and the anger, I would say yes. And that's certainly driving a large share of the population. They don't believe our political class and our elites and our major cities where a lot of decisions are made. They don't think that those people and places are delivering for what used to be Main Street. And so I certainly think that plays an enormous role in what people are experiencing and how they're voting. And if you're thinking about what we could be doing differently, we ought to be asking ourselves, how do we ensure every American lives in a flourishing neighborhood, a flourishing zip code? And the politician who steps up and says, this is my vision to ensure that our country works more horizontally and less vertically, to ensure that every place is gaining socially, economically. The politician who can speak to that need is going to win a lot of votes.
Isn't that something? It sounds like the social context follows the money in many cases, though, right? When we were done with shopping malls, we decided we'd all go to Amazon. We asked for these problems, right?
I mean, certainly there's a consumer demand, but I think we've made a lot of choices.
Was that just because it was easier, though, or because we didn't want to be around other people?
I believe that we all want to be around other people.
Do we?
Well, what do you do in your free time?
But
you
listen,
go into your cave and not talk to
I'm lucky enough to
anybody?
talk to people for a living. I'm probably not the best example.
And so you go home and don't talk to anybody? I bet you know your neighbors and things like that.
Sure.
So I would just say, I mean, as a person who, I live in a neighborhood that's joyful. Yeah. How many people listening or watching today live in a neighborhood that's joyful?
How do you
So it's
define
joyful
that?
because I know hundreds of people.
You hear children laughing in the street.
You hear children. I go into the local restaurant and I smile and say hello to the owner. I say hello to a few people. They're not my friends, right? But I know them. I know their faces. It's enough that I have a relationship. If there's an emergency, my daughter drops her son. This happened several years ago, and he's got a bleeding chin. Okay. My wife picks up the son and, without even telling me, runs down the street. What is she doing? I don't even know where she went. Doesn't even call me. Comes back in 30 minutes. He's bandaged up. She went to the nearest nurse. Do you know where the nearest nurse is to where you live? Imagine a life in which you know your neighbors. You have lots of institutions. I'm on the board of an institution. I'm very involved with the second institute. Organizations, the more we feel that we can control our context, the more we feel we can contribute, the more we feel that our surroundings are familiar and I have a stake in it, I will feel agency.
Okay, so you just said everything. This is about feeling like you're a stakeholder.
Feeling like you're a stakeholder.
So how do you maintain that in an upwardly mobile economy where people are moving for work, they get a better house, whatever? There are so many reasons to disrupt the neighborhood you're describing.
Well, that's true, but a good neighborhood in America will only have about 1 out of 20 households moving every year. Yeah. A neighbor that's not doing well will have 1 in 4. How
about that?
So if you think about we talk about that, and the average American lives within 20 miles from where they're born. So yes, we're upwardly mobile, but I think most Americans, and I would say it's more true if you have kids, it's more true if you're old, it's more true if you're young. Your neighborhood matters so much to your well-being. And so how do we do that? We need policies that will empower neighborhoods. We need government that works more around, not just, we don't need more housing units. Yes, of course we do, but we don't need government to work around housing, education, healthcare. What would happen if government worked more on making sure every neighborhood was flourishing? What would happen if our zoning wasn't single function, but was multifunction, therefore neighborhoods would have places to meet? What would happen if libraries were not just places to fill knowledge gaps? We don't have knowledge gaps today. We have relationship gaps. So what happened if libraries were broken up and distributed so they became more like neighborhood hubs to nurture? You can think through every rule.
Well, you're
zoning,
thinking through.
libraries.
Our lawmakers, our policymakers are not, though, because
would
now
say very few.
we layer on the internet on top of this world that you're
Very
describing,
few.
and we layer on politics here. So
Yes.
you've got a lot of lonely people out there with a big megaphone now. What
Yes.
does that do to distort the neighborhood?
I mean, again, if you're in a strong neighborhood and stakeholder was great. So if I'm a stakeholder in my neighborhood,
yes,
I'm more likely to not be on the megaphone angry. I'm more likely
be
to
talking
be
to your
engaged with
neighbor.
people. I might not only be talking to my neighbors, I might be doing something, or someone might be doing something with me. I'm with them together. And you would feel that your role to be influential is local. If people have nothing local they can engage with, of course they feel the only way I can matter is national campaigns, national politics, and that it's all abstract, it's all far away. I wouldn't say it's very productive.
Yeah.
If you think local and you engage local, you actually can make a really big difference in real people and real places. So yes, the internet makes things harder. It's like headwinds.
Right.
But this trend goes back to 1960s. It's been going on for decades. The internet is an accelerator, but it's not the start. And we need to rethink institution after institution and policy after policy and consider what does it mean for relationships. Even schools, we think of schools, how well do kids do on tests? But community schools, great incubator of relationships. How often do we think of schools as a way to incubate and nurture the relationships between kids, the relationships between parents? We don't even think about in our debates about what it is we're doing and how it affects people.
I've got a minute left. I want to end with a dose of hope here.
Yes,
because I
always.
see young people going home, going back to small towns, maybe to open a business, maybe to do something different on Main Street. That touchstone means more to them than people in my generation or maybe our generation. Is that how this ends? Is that the solution?
I think, yes, there is a trend in that direction. We need to encourage
almost
that.
a backlash to the cell phone.
The internet, the positive side of the internet, the negative we talk about. The positive is I can move to Cleveland, as a friend of mine did.
Yes.
I can move back to Eastern Kentucky, as I know people do. I can stay in Kansas or Southern Minnesota, and I can still be connected. Right. And I can still jump on a plane. I can still do a lot virtual.
So that's the upside of the internet.
That's the upside. We ought to be encouraging small business development, nonprofit development, encouraging young people to be leaders in their communities and not all end up in 5 cities.
How about that?
That would be very helpful for the country.
What an absolutely wonderful conversation. Seth Kaplan, thank you for coming to see us. The tonic that we need in a moment like this, and nowhere else will you hear a conversation like this today but on Bloomberg. The book again, Fragile Neighborhoods. Seth Kaplan, thank you for being with us. I'm Joe Matthew in Washington. This is Bloomberg.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. Just getting word that Melinda Gates is resigning from her role as co-chair of the Bill and Melinda Gates Foundation to, quote, move forward into the next chapter of her philanthropy. That, according to a statement posted on X. Stocks are a little changed right now ahead of key economic reports this week. We have got the S&P 500 index up 3, up less than 0.1%. The Dow remaining in the red, down 2 points. Also little change. NASDAQ up another 0.3%, higher now by 54 points. GameStop shares are surging 73% as speculation swirls around a return to social media by Keith Gill, who drove the meme stock mania of 2021 under the moniker Roaring Kitty. Right now we have got GameStop shares again up by 74%. And the American chipmaker NVIDIA is investigating in Wave Technologies, joining a $1 billion funding round for the UK startup that wants to get its autonomous driving technology into cars. Recapping, S&P little changed, up 2 points right now, up less than 0.1%. Balance of power continues. Back we go to Washington. Once again, here's your host, Joe Matthew.
Right, Charlie Pellet, thank you. Good to see you on this Monday, the Monday edition of Balance of Power, live from Washington here on Bloomberg Radio. You can find us on YouTube right now. Go search Bloomberg Global News. You'll find our live stream. It's pretty cool. You can back things up if you want to see something, maybe catch something that you missed. And, of course, join us here in the studio. Why wouldn't you want to do that? As we turn our attention to the Trump trial blog on the terminal, our live blogs are just the coolest. If you're somebody who's interested in following something in real time, or if you're like me, you got several of these windows open during the broadcast, it's just distilled moment by moment into what you need to know. Michael Cohen right now is testifying about the day he heard about the Access Hollywood tape. He was on vacation in London. I'm guessing his vacation ended that day. As we bring in June Grasso from Bloomberg Law, she's with us at World Headquarters in New York. And June, this is the moment we've been waiting for, right? Michael Cohen, Donald Trump's former fixer, the man he called a rat, who's actually served jail time to get to this moment. How's it going in day one?
So far, it's going well. This is direct examination, and Michael Cohen apparently has been very restrained in his answers. He's just been answering what the prosecution has asked him about, unlike the problem they had with Stormy Daniels last week, and he's being unemotional. So it seems like if he's not going down the road that he did in October when he testified in the civil fraud case, so he's doing very well, but we all know it's not about the direct, it's about the cross.
Right. Now, what are we expecting here? A couple of days based on what we saw from Stormy Daniels?
I would think so, but they're moving really rapidly through his testimony. I mean, look, it's not even their lunch break, and they're already up to the Access Hollywood tape. So after that, his testimony, this is the crucial part of his testimony, because this is the part, I mean, this is about not the hush money payments, as we've said many times. It's about the way they were recorded and why they were made, because it's not illegal. It's not illegal to pay hush money. So we're at that part in his testimony, and this is important because he's the one who's going to have to be the link to why these payments were recorded as legal expenses, and did Trump know about them? It was kind of interesting this morning. You know, we always say there are no emails. Trump doesn't have emails, so that's like an important part of the prosecution's usual case missing here. And Cohen said it was because Trump thought that he could get into trouble, that there are always emails showing up in trials, and that's why he didn't want to have put things down in writing like that. So that was pretty clever, and that has served Trump very well, as we've seen over these past few years.
There's a recorded conversation that we're hearing about today, June, in which Trump talks about the $150,000 deal with McDougal, who we're not going to be hearing from. But it supports the prosecution's claim, June, that Donald Trump was aware that Catherine McDougal was paid by the National Enquirer. Cohen told Trump he would create an LLC to facilitate Trump's reimbursement to Pecker. Isn't that the whole case?
Well, here's where I think that can cut both ways. So Trump is saying, let's pay in cash. And Cohen is saying, no, no, no. I know how I'm doing this. I know what's going on here. And then the tape cuts off. So it was his idea to set it up this way. So I think that also works for the defense in that, well, you know, who says that this was recorded as a legal expense? And how did Trump know about it? He said to Michael Cohen, handle it all. So what they've been trying to do on direct so far is show that Trump was a micromanager. You know, money didn't go out, a great deal of money, unless he knew about it, and he was micromanaging all the time. And that he said to Cohen, you take care of it. But, you know, I still think it's going to be, you know, it's that a critical piece. Is the jury going to believe Michael Cohen on this piece coming up, that Trump knew about it and knew the way it was done, and that it was done to cover up, you know, this hush money payment because of the election that was coming up. So I think that there are a lot of pieces that still have to be established. And despite what everyone says, and it's true that Michael Cohen, they've backed up his testimony in every way possible, with prior witnesses, with documents, texts, emails, all kinds of things. But I still, you know, the jury's going to have to believe him on this point. And the question is how well he'll hold up on cross, where he has so much baggage that the defense attorneys must be salivating, thinking of the cross-examination. I mean, it's just sort of easy because, you know, he's a convicted felon, convicted liar. He has lied before under oath. So, and he's also had this, you know, sort of crusade to try to get Trump for years and years and years, and that's come out in the testimony, and that he was injured because he wasn't playing a part in the cabinet, in the Trump cabinet. So the cross is going to be, I think, brutal. It'll be interesting to see how he handles it. He is a lawyer, so he knows what he has to do. But the question is, can you do what you know in your head you have to do?
We're only a couple of minutes away from our conversation here on Bloomberg with Bank of America CEO Brian Moynihan. June, in the remaining time that we have left, I was reading earlier today about the prep sessions that Michael Cohen went through with his lawyer, Lanny Davis, murder boards, as we call them. They really tried to shake him up, to try to kind of, I guess, excise the demons before he's actually in the room, as you're describing, and just can't deal with the emotion in the moment. He seems to be following the rules that his counsel laid out.
So far, yeah, so far so good. Everyone that I've spoken to and says that, yeah, they're doing really well. He's doing really well on direct examination. And I'm sure, yeah, they put him through a ton of cross-examinations, but you can never account for the feeling of being in the courtroom, you know, having Donald Trump right there, having a defense attorney who's you're not friendly to, asking you these questions. So I think there's always that element of, you know, risk, chance. What's going to happen? Is he going to be able to keep it together? And, you know, the prosecution hopes that he's been through enough that he will be able to keep it together. And the defense is going to bring out everything they can to try to shake him. So, you know, those sessions are really important, but they're not everything.
Yeah, sure. Then there's reality. At the rate we're going, though, June, to your point, if we're moving ahead quickly here, could we be into cross-exam by tomorrow?
I think so. I mean, I think we could be into cross-exam by tomorrow. And everyone expected that this was going to take much longer. They expected he'd be on direct for a couple of days at least. But the prosecution maybe is saying, you know, we're going to go through this fast and save his energy for cross. We have everything we need from him. So, you know, I think the really interesting testimony is going to be this afternoon to see how he comes across when he talks about the critical Stormy Daniels payments.
Yes, right. Which also means that it's going to be a critical episode of Bloomberg Law to catch tonight. Do we call them episodes? I feel like this is episodic, June, and you deserve to have an episode of Bloomberg Law. I know it's the Monday edition, but we're not missing these shows because they're just great right now in this very important time, June. Thank you, as always. From World Headquarters in New York, June Grasso, the host of Bloomberg Law, and we've got our eyes on what's happening in the courtroom for you in real time. We'll be updating this throughout the program, as you would expect. Our panel is coming in next as we bring you now a very important conversation at the Choose France Summit. The Bank of America CEO, Brian Moynihan, as I promised you, a series of important conversations today. He's sitting down with Bloomberg's Jonathan Ferro. This is live on Bloomberg.
Hey, Scarlett, thank you. Appreciate it. Alongside me, the Bank of America chief, Brian Moynihan. Brian, good afternoon.
It's great to be here. It's nice place that you
arranged. It's not bad, is it? Yeah. It's not bad. It's good to see you. It's somewhere different. President Macron, is he trying to sell you a French bank? What's happening here?
No, he's not trying to sell us a French bank. What he's trying to sell us all on is doing business in France, Choose France. And, you know, we have moved from 100 people here to about 750 people under Vanessa Holt's leadership for our European broker-dealer trading operations, and they've been great and accommodative, and the rules and stuff. It's been a great experience for us.
What have they changed? What have they done to attract that investment from you?
Well, we needed talent because we were locating a lot of jobs here. Some people moved, some people didn't. So they have a lot of talent. They have a lot of great people. They know the trading business because of the large French banks and the regulatory framework. And so they've made it accommodative to bring it over. And then they've made some work rule changes specific to our employees in the financial services business, made it easier. And they're always ready. Now they're trying to say, can you move a back office and other things here? So they're pitching a different style of economic development. But they've done a good job in changing France's reputation around the business community. There's a few hundred CEOs out there, all of whom have expanded their operations in France.
The reputation used to be pretty terrible. In fact, you know what the perception was? Why would you hire anyone in France when you can do that in London? Was it Brexit that changed that in the last 10 years? Is it something else? Has France actually got better as opposed to the UK getting worse?
Well, I think what they did is they're accommodative. They had the talent. They had the capability. Schools could expand and take people. Those are real things. But what they really did is they said, we need to be attractive. So they've lowered tax rates. They've worked on some of the work rules. Those are longer-term strategies that will help the country.
They're trying to close the gap, clearly, with the United States. Let's talk about the United States as well. I got a note from the Bank of America Institute, from Liz, the great work they do over there, and I was looking at the average balance for a customer compared to the average back in 2019. And for lower income, the numbers that you've got show it up close to 60%. What on earth is going on? How are the balances that much higher now versus, say, 5 years ago?
Well, the thing is that the account that was here in 19 lived through all the stimulus benefits and all the deposits went in, has also been ostensibly working since 19. Therefore, they've gotten the wage increases. And while inflation is tough on people, especially in the lower median income and down, in terms of increases, the wages have been growing. They just grew first, honestly, and then the prices grew after. So people remember the price growth, don't remember the wage growth so much. But I think it shows you the resilience of the American consumer. And if you look at the spending through the month so far in May, they're spending about 3 or 4% more than they did last May, in the first part of May. April was similar. It's slower. It's more consistent with a lower growth, lower inflation economy, but it's still positive. And positive means people are spending more. That means our economy is growing. And, and the rate structure may be higher, and we can talk about that. But the reality is it's in decent shape. There's 1,000 things that can go wrong tomorrow, but right now everything's in pretty good shape.
Are we living pretty well then, with interest rates north of 5%?
We're living pretty well with them, and people are getting used to it. But the reality is that at some point the Fed has to bring the front end rate to get to a normalized curve, because an inverted curve forever doesn't sort of economically compute. But I think our team thinks that the terminal rate, the end rate that they'll get to will be more in the 3.5% range as opposed to 50 basis point range or 1% range. And we haven't really had that since before the financial crisis. There was a moment in 16, 17, 18 where they raised rates, and they already started bringing them down to 19. So frankly, in our team, I say, if you're under 40, you've never seen this kind of rate environment, and this is normal. And so 3% front end, 3.5%, 4.5% 10-year, and people will get used to it, because America did a lot of economic activity prior to 2007 for the 200 plus years of existence. So people have been used to it. It's just that we're in a very unusual time, and so the adjustments are taking place, and it's running through the economy.
We're hearing from some companies that maybe there are some cracks. We heard from Starbucks, McDonald's offering a similar view on the U.S. consumer. You've got some 69 million customers. What do you see? Do you see those cracks at all starting to emerge this year?
So if you think about it, where would the cracks emerge? You talked about the average account balances. They're still, especially for households 75, 100,000 and below, the account balances are higher than the pandemic by a lot. If you think about the spending settled into a more normal, where it was in 16, 17, 18, the Fed was raising rates, inflation, they're pushing, inflation was higher, they're pushing it down or holding it steady. So that's normal. And then on the credit side, we're just normalizing to where we were in 19. So in 2019 was a 50-year low in credit costs in our company, and basically last quarter we were a little bit higher than that. And so we're normalizing, so it's increasing off a base. And people say, oh, your charge-offs are going up, but they're getting back to where they were in 19, and frankly, people thought that was very good credit, and it factually was. And so the question is where they go next. The good news is we're starting to see delinquencies flatten back out, i.e. they're not growing anymore. They normalize, and then they're staying. That's good news on the consumer side. So it's all okay. It's just higher rates are tough on people on the mortgage market. Mortgage originations are way down. Higher rates are tough on corporations are using the lines a little bit less because, small, medium-sized companies, because it costs more. And if it costs more, you're going to be more judicious about it. So that kind of adjustment, what the Fed is doing with rate structure is having the impact they want. On the other hand, the economy's kind of there, and now we got to be careful we don't overshoot the other way. It's right now we have a no landing, honestly, a 2% growth rate, because you can't say it's a soft landing. But that's been pushed out to when it occurs, and we got to be careful that we don't overshoot, because you see the consumer confidence numbers tipping down a little bit. That's what you got to be careful of. If the consumer leaves the game, it's hard to get them restarted.
So when I look at your consumer, and whenever we report on your numbers, Q1, Q2, Q3, Q4, we look at the average FICO score of some of the lending that happens, and it's really, really high, like close to 800 for vehicle lending. Can you tell me whether your experience is a decent snapshot of America, or whether you're just catering to a much higher quality consumer?
On the lending side, we're prime, super prime, and auto, for example. So there's a broader base of consumers out there. 80-20 rule, prime versus subprime, and we don't play in the subprime at all. So, and that's because of history and how we got here. On the deposit side, completely different. We open accounts for anybody that really wants an account, and then we are a great starter place for people to open their first bank account and then grow with us. And we opened 1 million of them basically over the last 12 months, 1 million net new accounts. They start at 3,000, they grow to 7,000. So that's pretty representative of America, and we're 90% plus the core household account, meaning it's used for all the day-to-day flows. So we got pretty good data there. On the lending side, we'd probably tilt just a little higher, but it's still strong. But 80% of America is prime space, so it's not like so the difficulties you're hearing about, I can't really reflect on, but they tend to be in the subprime space.
That's the consumer. Let's talk about businesses. We're seeing a ton of debt issuance, supplies through the roof for Q1. What do you think that is? We've been trying to work out whether that's pull forward from the back end of this year or catch up from the back end of last year. Which one is it?
Well, I think if you did a lot of financing and it's coming up in the next couple of years, your hope would be rates would fall and you get a lot lower nominal rate, because you may have done it, in 2020 or something when there's a massive amount of issuance. The problem is it's not clear that's going to happen. So now people are saying, I don't want to run to the wall and then find out the market closes because some external event or something. So people are just financing it forward. There probably was some pull through of the year when people said, all rates may, not go down. Why don't we just get it done and get it over with? The markets business is kind of fascinating. The first half of the year is always much more active than the second half of the year, and you keep saying there's 4 quarters. Why wouldn't it space out? It's just natural human behavior. People like to get things done. Yeah. But I think it's been pretty strong, and we feel pretty good about it. We had a good investment banking fee first quarter, which really reflects financing activity, equity, and debt. But I'm not sure there's any right answer there, but the reality is that it was very high, so the assumption would be go lower. But on the other hand, people have to look forward and say, am I going to wait to 2026 to refinance that debt? Or, frankly, they're investing. There's lots of capital improvements going on. People want to term that out. There's lots of M&A starting to kick up a little bit. People want to pay for those deals. So there's stuff going on, too, that requires them to raise incremental new money.
Can we touch on M&A? We talked about this a few months ago when we visited you, and you talked about the reality for some companies that they can't make deals right now because they don't know if those deals will close. Do you sense that there is some momentum in the business now going into November, or is there a sense that people are just going to wait to see how this washes out?
The activity going on in the business is very high. A lot of conversations, a lot of deals being signed up. The concern still applies of whether deals which would appear to any other in the past, so to speak, have gone through without challenge, without delay. To stay with a deal for a year plus takes a lot of intestinal fortitude. A lot of things can happen in your company, can happen in the other company. People can lose enthusiasm for the deal. All things can go on. And so people have to sit there and say, can I do that? Large companies can hang on longer because they just have more resiliency, especially if they're buying a smaller company. But a company that's buying a company might be 30 to 40% of the size. They have to be very careful, and they're cautious. They want to do it. The question is, can they get it done? And that's one of the things we say to policymakers is clarify the rules and let people get through, because an M&A transaction, people think, well, it's just about getting bigger. Remember, on the sell side, that's obvious. The payment goes out to the shareholders and the employees a lot. That's good for them. But on the buy side, what does it mean? That company's making an acquisition, getting bigger, going to dominate the world. We're going to go over and we're going to become the best at X, Y, or Z. Without being able to make acquisitions, they can't get that strategic growth. So especially when you're talking America only, those American companies are looking to be the best companies in the world, and M&A is one of the ways they do it. If you stop them, you're stopping America's prosperity and growth. And I think, frankly, the theme here in France is we need business, we need labor, we need government, we need it all work together, we need green, we need oil and gas, we need nuclear, we need it all work together. That idea of trying to figure out how it all works together, because at the end of the day, the numbers of employees for our companies and us growing on a worldwide stage is critical to the health of America.
Do you not get that message from Washington right now?
You get it. It's mixed. It's mixed. And I think that's been the debate is how do you, America is has a chance to win like it's never had to win because of the resilience of our economy. So when you look at 2007 to now, you look at the size of the European economy, U.S. economy back then, roughly the same size. Now America's 50 to 60% bigger. That's the resiliency of the American economy. So we have to have capitalism done right, and I think policies that promote that are what's going to drive America to stay great and be great. We can solve any problem, we can get through everything if we're growing, and one of the ways we grow is by letting M&A happen, by letting our companies do it fairly with the consumer, fairly with other companies, but do it the right way.
You sound like a policymaker.
Look, I've been at this a long time now, and I've seen the ups and downs. I think it's really interesting. When you think about companies around the world, they want to invest in the United States, talent, work rules, big market, huge market. And I think there's real opportunity for American companies if we get this right.
Every time we talk, the interview ends at the same place. Treasury Secretary, thoughts on Washington?
I have the greatest job in the world, and I've got a lot of work to do for Bank of America, so I'll let somebody else have that honor.
I imagine that was a bottled answer ready to go. Brian, it's good to see you.
Good to see you.
Thank you, sir. Brian Moynihan there. The Bank of America Chief Executive, guys, I throw it back to you in New York.
Many thanks to John Farrow in a fascinating conversation. I'm Joe Matthew in Washington. This is Balance of Power on Bloomberg Radio, on the satellite, and on YouTube. We're going to assemble our panel next with a lot to talk about today. First, though, we want to see how markets are doing, and for that, we bring in Charlie Pellet from World Headquarters in New York. Charlie, how's it going?
Hi, thank you very much, Joe. We are looking at a mixed market right now. S&P little changed ahead of economic data tomorrow and Wednesday. Right now, we've got the Dow down 16, drop there of just under 0.1%. S&P up 1 point. We've got the Dow, the NASDAQ Composite Index up 53. That is a gain of 0.3%. 10-year 4.47% with a 2-year 4.85%. Gold right now is trading little changed. We do have actually gold down 1% now. We've got West Texas Intermediate crude oil up 0.6%, 78.71 a barrel. Two key economic reports due out this week will focus on household and retail sales along with the Consumer Price Index. And with that story, here's Bloomberg's Vinny Del Giudice.
Inflation is pinching Americans. There's evidence some families are having trouble keeping up with debt payments racked up due to the rising cost of living. There's also a general pullback in credit card use and greater reliance on buy now, pay later programs. Bloomberg Economics notes the cost of dining out is also an issue, especially in California, due to a new minimum wage law. The retail sales and CPI reports are due Wednesday. Vinny Del Giudice, Bloomberg Radio.
Meme stock mania is back. GameStop shares up now by 70%, and Apple is preparing to start selling the Vision Pro in markets outside the U.S., testing whether the $3,500 mixed reality headset has broader appeal. Apple shares today up 1.9%. Recapping, S&P up 2 points, little change. Back we go to Washington once again. Here's your host, Joe Matthew.
Charlie Pellet, thank you. Welcome to the Monday edition of Balance of Power. From everything I'm hearing so far today, in some pretty high-profile interviews, things are pretty good around here. We're in a pretty good spot for our economy. You just heard John Farrow's conversation with Brian Moynihan at Bank of America. Just look at the headlines on the terminal. Wage growth has boosted the American consumer. Moynihan, still positive on spending in the U.S., people getting used to a higher rate environment. Says the U.S. has a chance to win because of its resilience. Look at Jonathan Farrow's conversation earlier with the big boss at Goldman Sachs, David Solomon. The headline says it all. Solomon, times are good for Goldman and the U.S. economy. But when you crack this new Siena poll, it makes you wonder what's going on. Working, of course, with the New York Times and also, in this case, the Philadelphia Inquirer, Siena, finding that Democratic candidates for Senate are doing pretty darn well. Arizona, Nevada, Pennsylvania, Wisconsin, the states that matter, and are running well ahead of Joe Biden, who is losing to Donald Trump in 5 out of the 6 swing states they're looking at in this poll. And you better believe the economy has a lot to do with it. So we assembled our panel for their take on this and a lot more today. Rick Davis and Jeannie Shanzano are with us. Bloomberg Politics contributors, our signature panel to start the week out here. Is this a head scratcher for you, Jeannie, when we cannot connect the dots between a very real story? You're hearing Brian Moynihan, David Solomon talk about this, but voters say, no, that's not the economy that I'm living in.
Yeah, they say, no, that's not the economy. And whatever good news there is out there, they are not going to give Joe Biden, or they don't want to now give Joe Biden credit for it. So, I look at this poll and it says, three basic things to me. One is consistent. It is fairly consistent with all the other polls we've seen out there. Number two, you see a battle of the belts, the Sun Belt versus the Rust Belt. And to your point, number three, it's pretty good to be an incumbent if you're running in the Senate, and not so much if you're running from the White House. And this has been a consistency of the modern American political scene for a long time. And this poll just says it over and over again. And that is the challenge that the Biden team faces. This is a tough poll, not good news for Joe Biden. And they are going to have to figure out a way to respond to it because, we are gearing up for the summer conventions and they have a lot of to make up.
Rick, I'm sure you have your thoughts on this particular research, but you look at this and you wonder, are we going to have a Democratic House and Senate and a Republican at the other end of Pennsylvania Avenue?
Yeah, you could. Certainly, early indications are that everything is close enough to have just about any outcome you want to design. But this poll certainly looks good for Democrats. I would say you got kind of a preview of this when the Consumer Confidence Index on Friday came out, and taking a precipitous decline, hovering around 80 points for the last 3 or 4 months, pretty stable, just not going up, which is what Biden would want it to do, and it went down almost 10 points. So the fact that consumer confidence has fallen doesn't surprise me that these numbers look the way they do. And one of the things Brian Moynihan said was that people were getting used to the higher interest rate environment. Well, that's not what the Consumer Confidence Index said. In fact, that was the leading item that gave people kind of a sour attitude toward the economy was higher interest rates. So long story short, Biden's not just battling for re-election. It's not just political dynamic. He owns the economy. He will rise and fall as the economy does. And right now, that seems to be a downward arrow.
Amazing. And I know that everyone has their own perspective on this. Interesting line on ticket splitters in this poll, Jeannie. 10% of Trump voters back the Democratic candidate for Senate. In 4 states here, 5% of Biden supporters back the Republican. How does that come out in the wash?
Yeah, this is going to be tight. The map always looked much, much better for Republicans. This, poll gives Democrats some hope. I think every light has got to turn green for them to keep the Senate at this point. This is going to be tough, but the incumbents do have some benefit. And of course, you've got Republican candidates that have challenges. You just look at somebody like Carrie Lake, or you look at somebody like Dave McCormick. They have challenges. Now, all these candidates have challenges, but they're running against incumbents. One thing I always tell students when you think about Congress, and this is writ large throughout modern American history, is that people tend to like their representatives and senators. Our people in Washington, for everything we throw at them, they do constituent service really, really well, but they don't like Congress overall. And so that plays itself out in these numbers. People like the incumbents generally. There will be some ticket splitters, but I think for Democrats, the question is, how does Joe Biden do this? And I think one thing he's got to do is make these state races in those 6 to 7 swing states. He's got to be spending as they've started to. And he's going to have to essentially try to make this about Donald Trump and sort of see if he can get a lift from the down ballot, which is quite unusual.
The analysis from the New York Times is really something here, Rick, and it gets to what you were talking about. The findings in this poll are basically unchanged since the last series in November. However, think about what's happened since then. The stock market has gained 25%. Donald Trump's criminal trial has started in New York, and the Biden campaign has put out tens of millions of dollars in advertising. So you put this all together, Rick, and the conclusion is until prices come down at the grocery store and maybe the gas pump, these numbers are not going to change.
Yeah, I think that's probably true. It's certainly not going to change in May. I mean, I hate to say it, but all that money that Biden's spending on TV advertisements, it's awful hard to make numbers change in May or June or July or August, right? I mean, like, this is why a lot of candidates husband their resources until September, because that's when people really start to focus in on the presidential campaign. But I would say maybe we are seeing some change, because this point that Jeannie makes is important to watch. We've lost local politics in America for the last 20 years. Virtually every election is decided by the top of the ticket. Almost every state right now, excluding the targeted 5 states, basically are chosen for by the candidate. You know, if you're one of the 45 states that aren't going to see a presidential campaign, it's because you're either a Republican state or Democratic state. You have 2 Republican senators or you have 2 Democratic senators. You have a state house and the governor that's just like the same party as the senators. And by and large, very few competitive congressional districts. So if there is indeed, and I'm not sure I'd bet money on it yet, but if indeed there are swing voters this time who, you know, will vote for a president and then a member of the Congress or a senator from a different party, that could change this dynamic of this election different than the last 20 years. But right now, I'd still say all politics is national, and most of these constituencies are going to return to their party.
Something to consider if you've been with us since the beginning of this hour, talking to Seth Kaplan in the outset here about how local could be the future in this world in which national politics are driving the conversation. It's amazing. Jeannie, enter the old folks strategy. With all the money that we're talking about, $15 million, I think it was, for the month of May, the president's team reporting today on Bloomberg is intensifying the outreach to older voters. Volunteers are organizing bingo games in swing states and running ads during daytime shows popular with seniors, such as The Price is Right. Now, I take offense to that because I like The Price is Right, Jeannie, but is this what it's come to? Have we given up on the young voter?
Me too, and I like bingo as well. You know, this poll was devastating for Joe Biden as it pertains to young people. I think we are possibly in the midst of a realignment with Republicans in Donald Trump. Maybe if these numbers hold, which is a big maybe, getting double the number of African-American votes that they've gotten since the early 1960s. Young people, Latino voters, all swinging in his direction. So that's tough. Joe Biden has got to try to get as many of his core supporters out. And right now, the strongest among them are the older voters. And of course, you know, one big challenge for Donald Trump with those supporters that he has are there also the voters who are less reliable getting out to the polls. So, you know, Donald Trump's going to have to work equally as hard. I think one of the big challenges he has is not just abortion, but early voting. And of course, getting these less than reliable voters out. But yeah, so Joe Biden's got to get in these states. He's got to get local. If it takes, you know, I don't know, getting a game together that us older people like, Joe, so be it. You're not old, Joe.
That's right.
Speaking for myself.
Well, thank you. I don't know. I think my AARP card's on the way. This has become, since I just mentioned this, this has become a game in the newsroom already, Rick. The tiles on the Biden campaign old folks bingo game, I'm seeing a few suggestions already. Hush money, drink Clorox, Covfefe so far, the top 3. You know how this stuff works. Rick, is this election going to be decided in the bingo hall?
Well, look, I mean, as Jeannie points out, older people vote at a much higher incidence than these younger people that we tend to talk a lot about, and they certainly seem to be appearing to be more intense voters this time than these younger voters. So that does bode well for Joe Biden. Whether bingo will get him there, I don't know. But I also think it's kind of interesting to see what's going on at the Republican Party level. The campaign, Trump campaign just put out a memo saying, the RNC is not going to spend so much money this time around. We're going to live off the land. We don't have all this money for these operatives. That could affect turnout.
Yeah. All right, they're back next hour. That's Rick Davis. She is Jeannie Shanzano, our signature panel. I feel like a little game of Plinko could solve all of this right now. Kaylee's coming in next for hour 2. Have your pet spayed or neutered. I'm Joe Matthew. This is Bloomberg.
politics to the world of business. This is Balance of Power. Live from Washington, D.C.
Seeking context today on Bloomberg through a series of important conversations that you will not hear anywhere else. Welcome to the fastest show in politics. Live from Washington, I'm Joe Matthew, alongside Kaylee Lyons. And Kaylee, the next conversation we bring our listeners and viewers today is with French President Emmanuel Macron, with some interesting insights on a lot of the stories that we're talking about here domestically and internationally.
Yeah, he sat down for a wide-ranging interview with Bloomberg's editor-in-chief, John Micklethwaite, in Paris, and in large part focused on economic issues, not just domestically in France, but internationally as well, as we get the French view on things like tariffs, for example, and the competition with not just China, but the U.S. in some aspects as well.
It's actually a great opportunity, Kaylee, to slow down, take a breath for 1 minute away from breaking news. Lawmakers are out of town until tomorrow, at least the business business part of Congress is quiet till tomorrow. The president's making his way back from Rehoboth Beach, and we have an opportunity to find some real insights today. Looking forward to this one.
Yeah, so we will be bringing that full conversation to you in just a few minutes. First, though, as always, here on Bloomberg Television and Radio, we got to get a check on the markets with Charlie Pellet up in New York. Hey, Charlie.
Hi, thank you very much, Kaylee Lines. Little change for the U.S. stock market. That is the key takeaway until we get key economic data tomorrow and Wednesday. CPI retail sales coming up this week. Right now, S&P down by less than half a point, flat on the day. We have got the Dow down 41, dropped there of 0.1%. S&P, by the way, swinging between gains and losses. NASDAQ holding on to a 49-point gain, up now by 0.3%. 10-year at 4.47%, with a 2-year 4.84%. Spot gold down $24 the ounce, lower now by 1%, while crude oil, West Texas Intermediate, up by 0.6%. Meme stock mania back big time, with GameStop shares surging. GameStop up right now by 69%. And some of the other stories that we're following today, sources tell Bloomberg, Walgreens Boots Alliance is reaching out to potential buyers of the $8 billion Boots drugstore chain in the United Kingdom. Shares of Walgreens Boots Alliance up now by 5%. Recapping, S&P down half a point. Balance of power continues. Back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lines.
All right, Charlie Pellet up in New York, thank you so much. Meantime, here in Washington, a lot of the conversation in recent days, Joe, has in fact been focused on geopolitics, the U.S. relationship with allies, as well as with adversaries. Of course, Israel policy front and center, but increasingly, especially in the context of the 2024 campaign, trade and competition with both allies and adversaries has been very much in focus, as we have the Biden administration getting set tomorrow to announce new tariffs or even higher tariffs on things like Chinese EVs and solar cells. And of course, other countries, in addition to the second largest economy in the world, have to be paying attention to that too.
Well, that's absolutely right. Emmanuel Macron is right in the middle of it. Obviously, as the leader of France, he has unique insights on a number of the issues that you just mentioned in a conversation that we're going to bring you now here on Bloomberg. The tariffs did come up, Kaylee, just one of many topics that arose in this sweeping interview at the Choose France Summit, where the president was invited and brought foreign executives from around the world and has done so for the past 7 years here. Sat down with Bloomberg's editor-in-chief, John Micklethwaite, and they began their conversation on investments in France. Let's listen.
We delivered a lot of reform. Since the very beginning, 2017, tax cuts, flat tax on capital gains. We decreased from 33.3 to 25% corporate taxes. We made a lot of reforms on labor law. And after COVID, during the past 2 years, with inflation, war in Ukraine, we passed reform and on pension scheme and unemployment mechanisms. I don't see a lot of countries around us having done so. So
you don't just want to be compared to Europe, do you?
No. My point is just to say we delivered, we do deliver, and we will deliver. And this is why we will launch this week a new bunch of reform on labor market. We will launch a new bunch of simplification and an attractiveness package for finance. And we will prepare for, we have already launched new simplification, and we will prepare for September a new bunch of reform on labor market. So it's a permanent work. But I see where we come from and where we want to go. France was lagging behind, clearly in Europe, because of too much bureaucracy, a strong system, a lot of strengths, but lack of competitiveness. I think I see that we clearly bridge the gap with the others, and now we are front runners in Europe. My concern is not just France, is Europe in comparison with US and China. And this is the point you mentioned. During the three past decades, if you take the last 3 decades, we created half of the value per capita created by the US. Why? Lack of innovation, lack of investment. This is the main reason. This is why now my top priority is to have a European policy saying we have to be much more innovative. We have to create a much more efficient capital markets, we have to invest much more from a common budget as Europeans and from the private sector. And we have to deliver in parallel our decarbonation, because I do believe that climate, digital, growth and job creation are the three pillars of what we have to deliver.
And those, we will go through all of those, but just on that point about the European economy, you had a full-scale attack on it at the Sorbonne, where you said it is sclerotic, it is being left behind. Do you think that, from the EU's point of view, that sclerotic economy is a bigger long-term challenge than, say, Vladimir Putin?
I think this is clearly linked to what's happening as well, but we have to completely reset our model. I think now France clearly is one of the leading economy. We are number one in attractiveness. We've been number one during the past 5 years. And if you take job creation, growth, we are one or second in the Eurozone.
Do you think you're being
held this is my point. So we are here. Now when I take Europe, and especially the EU as a whole, but it's true as well for UK, we have this issue in terms of business model. Why? Because we had low-cost energy thanks to Russia, production thanks to Central and Eastern European countries with quite low costs, a market for exports, China, and a geopolitical umbrella, US. These pillars are being completely revised, totally.
Yes.
And it's no more valid. So we have to reinvent. What and how? By creating much more value on our own, by being much more innovative, by creating much more jobs, and jobs with value, good jobs, I would say, on our continent. The key point is deliver much more innovation and productivity policy, public and private. So the second key reforms is to accelerate decarbonization, and especially our electricity policy, because through renewables and nuclear energy, we can deliver low carbon, sovereign, and low-cost energy, which is much more than importing gas and fossil fuels. Third, we need much more investment based on common budget, and my view, I mean, based on public reports and figures, we need 1 trillion more in terms of budget, in terms of spending. And in parallel, we have to make the capital market union a reality, which is not yet the case.
Can I come on to capital market union? Because you have here an example. You have BNP.
Yeah.
Now probably Europe's, and definitely the Eurozone's most successful bank, worth $80 billion. But you know, you are entertaining these people like JP Morgan and so on. JP Morgan is worth $550 billion. It's 9 times as big. Bank of America, 4 times as big. And the reason why is BNP Paribas cannot expand throughout the European Union and take over other banks.
This is very true. We have several issues.
You would like to see BNP take over one of these, take over a German bank or an Italian one.
I mean, we do need a consolidation, but we do need as well an actual domestic market as Europeans, which is not the case. We have to deal with 27 regulations. You know, energy, finance, and telco are the key sectors where single market doesn't exist. It was a choice at the very beginning. I do agree that we have now to open this box and to deliver a single market approach. It's much more efficient. So our view is that now we want to elaborate a Franco-German consensus on capital market union to have a single system of resolution, a single supervision, and a much more integrated capital market union.
But would you be happy with, say, Spain's Santander coming and buying Societe Generale?
I mean,
part of that.
It's part of the market, but dealing as Europeans means that you need consolidation as Europeans.
So it could be cross-border mergers in both directions.
But this one is for banking union. It's already on track. Now we have to do it for capital market union, which is broader and even more difficult. But we started to do so at a political level during the last council, and I do believe that we can find a Franco-German agreement. But why? I want you to just understand the challenge for us. 75% of our financing as Europeans go through banks and insurance. So we need much more consolidation, but we need a clear circulation of the savings all around the place. This is the first objective, to be much more efficient and to be sure that our savings will be invested in the right sectors and the right geographies. Second, every year, 300 billion savings goes to finance the US economy because we are not attractive. So in parallel with this capital market union and the simplification, having an actual single market, we clearly need the same level playing field as the US in terms of financing, which means when you take solvency and Basel, as long as it's not implemented by the US competitors, it should not be implemented by the European competitors. Otherwise, this is a killer for risk-taking, because these regulations just prevent you, our banks, from investing in equity, which is exactly what we need. And if you take the key driver of this difference between the US and Europe, the key driver is the fact that the US economy innovated and invested much more in equity and innovation than the European economy. I think we did much better during and post-COVID than what we did during the financial crisis. But now this is a totally new world. And we do need this new business model for the Europeans, more innovation, more investment, single market and capital market union, and a relevant trade policy. Because I want to add this point.
Can we come back?
None the US nor China are compliant with WTO today. We are the only one in the room to respect just the regulation of WTO. And we are too naive. We are too open. Both of them protect their players and their economies. We have to do the same.
Can we come back to the issue of China later? But just on another French company, Total, you mentioned energy. Total's CEO has talked about moving its primary listing away from France towards New York. Would you be happy with that?
Not at all. And I would be very surprised. No, I wait for any confirmation. I understood it was rumors, so...
But it's interesting that it's tied to the idea that he would face extra ESG measures here that he would not face in America. And he thinks that would affect his valuation.
Do you mean that we are more serious than the US in terms of green economy and transition?
Yes, but you also, in your speech at the Sorbonne, you said, as I'll paraphrase, you said you cannot let decarbonisation and growth be enemies. And this would appear to be an example.
And this is my point. Yeah. But the point is just, we have to be sure when we regulate, we should not over-regulate.
Yes.
And I think now we have to deliver. We need in Europe much more investment. We have to cut red tapes, have more flexibility. But in parallel, everybody has to be serious. I saw a lot of funds, a lot of asset managers saying, we are with you on climate change. Where is the beef? Are you sure you are sufficiently compliant? Are you sure you are clearly addressing the same issues? This is my point. And this is why we need the resynchronization between the US and Europe. The resynchronization is, number one, the US regulation in terms of climate change should be more serious and realigned than the European ones. Second, the Europeans have to invest much more and be more serious and realign themselves on the US.
Can I just ask you about another French company? I've asked you about Total and BNP. LVMH, I looked, and nobody has done better under the Macron presidency than Bernard Arnault. His wealth has increased by 170 billion euros, and he is now the richest man in the world, probably the first Frenchman to have that honor since Napoleon. And I think we can both say bravo to Mr. Arnault. He's done it in a more peaceful way. But it's interesting. You look at the people who've, right at the very top of the wealthiest people in France, they're mostly either heirs or in fashion or both. And I wonder whether that is the kind of France you talked about creating. You always talk about technology, but the people who've done really well are these old-style businesses.
You're right, all of them. I don't think it's an old style of business, but it's a business where we have competitive advantage, luxury, fashion, and so on, because France is one of the great places. And Bernard Arnault consolidated this market very early. He was one of the front runners in this industry. And I think it is very good, and this is a chance for us, because first, we speak about a lot of jobs which are located in France, because a lot of these jobs are impossible to be relocated elsewhere when you speak about alcohol, when you speak about cognac, armagnac, champagne, fashion, and making a lot of this stuff. It's added value. It's low qualified and very qualified jobs. And in parallel, he consolidated the market elsewhere. And thanks to the fact that he is listed in France, we consolidate a lot of value and value creation elsewhere. And this is why, thanks to Total, LVMH, BNP, and so on, we are the second largest place of the world to list your company.
But there is a tension, isn't there? If I look at all those people, or certainly Immerse, LVMH, Kering, all those ones, they have done spectacularly well by exporting to places like China. They've done very well out of globalization. And all the prescriptions you were just talking about in terms of Europe having higher trade walls, being tougher with China, you know what will happen in a couple of months' time? The Europeans will say, we want to put tariffs on electric vehicles. And what will happen is Mr. Xi, despite what he may have told you last week, he will come back and he will put tariffs on cognac. And that will help those very successful French business people.
Look, I think this is exactly the mistake we made 20 years ago on solar panels, and we killed our industry. I'm very simple. I don't lecture and blackmail anybody. I just look at the picture. When you have tariffs of 10 for Chinese electric vehicles entering into our markets, and when you are taxed between 15 and 24 when you go to the Chinese market, you have an issue. And on all the different sectors, what we want is just reciprocity. We want, and in fact, more than that, more just than regarding the relation with China, level playing field. So what we ask for is exactly that. We want to be sure that in terms of tariffs, subsidies, rules of production, we have a fair competition. And I mentioned it very openly to President Xi. So it is not a geopolitical agenda. We don't want to blackmail and push back some of their production. We want to be sure it is fair. It's fair to launch precisely inquiries and look in details at the situation and revise it. If we are weak, if we are threatened by the fact that you can have retortion measures, you just don't do what you have to do. We had this discussion, and this is why they decided not to implement the first measures on cognac, but to withdraw the first one. So I think it's a normal approach, but look at the situation today. The European Union is the most open place of the world. But you cannot survive if at the same time you have subsidies and overcapacities in China and protection in some part of the market, and Inflation Reduction Act and Buy American Act in the US. It doesn't fly 1 second.
So Europe has got to get tougher now.
But this is a necessity, not because we are protectionists, but just because we want to protect our economy.
The Germans do not agree with you about this.
I think it depends who in Germany and for which perspective. It's totally true that some German companies, when they are incorporated in China, for instance, benefiting from subsidies, not just German, European, American, their interest is probably to preserve that and to sell themselves their overcapacities in China to the rest of the world, and especially the European market. But the German economy's interest is totally aligned with the French economy's interests, meaning creating jobs, creating value, but just protecting your business and your people when they are attacked by unfair measures. And it's normal. It's part of the business. So for me, it's just a no-brainer.
That was an exclusive conversation between French President Emmanuel Macron and Bloomberg editor-in-chief John Micklethwaite in Paris. And so interesting there, Joe, to hear them talking about not just China when it comes to trade and competition, but the U.S. as well. We just heard the French president saying, while the EU is one of the most open places in the world, you can't survive if you have subsidies and overcapacity in China and things like the Inflation Reduction Act in the U.S. He specifically mentioned electric vehicles in that conversation.
Yeah, and we knew that the EV subsidies in the IRA were a problem for a lot of our allies in Europe. But it's interesting today, we just had this fascinating conversation with the president of France, that very same issue, and specifically competition with China by way of tariffs that we expect to be announced as early as tomorrow by the Biden administration came up as well. Our colleague Anne-Marie Hordern caught up with Janet Yellen, who is in Fredericksburg, Virginia, to talk about something altogether different, the use and implementation of infrastructure money. But of course, conversation continues to return to China. Here's what the Treasury Secretary said earlier on Bloomberg.
We do think that the playing field should be fair, and China engages in unfair practices like massive subsidies of industries they've decided are critical, and those are cases where we will act to protect ourselves.
Treasury Secretary Janet Yellen earlier today. And of course, while the Treasury Secretary was speaking to what the Biden administration is looking to do, which, yes, to be sure, is still protectionist in many ways, Joe, the expansion, potentially elevation of existing tariffs against Chinese goods, it's still a bit more measured than what, say, former President Donald Trump has suggested he would do if he returns to the White House for a second term at the White House, suggesting blanket 60% tariffs on everything coming out of China.
That's true, although it's pretty eye-popping to see a north of 100% tariff we're talking about on Chinese EVs. We'll have a lot more on that tomorrow, Kaylee.
Absolutely. And meantime, today, we have to have a lot more, not on the policies that would be pursued by a second Trump administration, but the way that the presumptive Republican nominee is spending his time these days, including today in court in New York, although his criminal hush money trial is on a lunch break as we speak. We have had hours of testimony from Michael Cohen, his former fixer and attorney, the prosecution's star witness in this case, who has been testifying to his relationship with Donald Trump and what exactly went down with the payments made to catch and kill stories in the National Enquirer in the days leading up to the 2016 election. High drama in the courtroom once again. So how does it factor into his political ambitions? Joining us now is our signature political panel, Rick Davis and Jeannie Shanzano. They are Bloomberg Politics contributors. And Jeannie, obviously you are up in New York, where all of this has been going down for several weeks. So much has already been unveiled in this case so far. We already heard last week salacious testimony from Stormy Daniels, but is Michael Cohen the last piece of the puzzle that comes together to create potentially a massive headache for Trump and his campaign?
Yeah, this is what the prosecutors are hoping. This is, you know, the big sort of moment in this trial. He's at the easy part of this at this point, because he's going to have to face, I think, what's going to be a blistering cross-examination, and we'll have to see how he holds up under that. You know, Michael Cohen had a really, really difficult time in front of the Senate, so he had a bit of time to practice with this. By all accounts, this should be a little more tame, but it's going to be tough. And this is the heart of the prosecution's case. And, you know, Donald Trump's team is going to go hard on Michael Cohen. And what I think has been, you know, noteworthy today is that Donald Trump and Michael Cohen have both behaved themselves so far, if you will. And that's what both of their sides wanted them to do, not get emotional, not have any outbursts. And so far, both of them have done that.
I'm reading this fascinating Trump trial blog, live blog on the terminal, Rick, and it is entertaining. It was certainly salacious during Stormy Daniels' testimony, and maybe this will become the same. He's describing hearing about the Access Hollywood tape while on vacation and all the drama that followed. But does any of this actually change anyone's mind politically? I realize it's important to the legal case that's being made, but this is a political program. And if you're a Trump supporter, you know about Michael Cohen already. If you're a Joe Biden supporter, you probably feel the same way, right?
Yeah, it's hard to tell how much voters are really paying much attention to the details of each of these. I mean, we obsess over this, a lot of coverage.
Yeah.
The media, it's extravaganza. But so far, we haven't seen a lot of movement in any of the surveys that we've seen through the course of this. So we've now had about 3 or 4 weeks of good sample, and nothing really is moving it. And so I think it's really what you were saying is, like, how does this determine the outcome of the trial? Because there is some clear indication that voters who have concerns about Trump say that they're more likely not to vote for him if he's convicted of a crime, and is certainly in that case. So clearly, this is the probably biggest headline star in the case, next to Stormy Daniels herself. And I think the distinction he's already made today was in his testimony that this wasn't about Melania. Trump didn't seem to care about Melania finding this stuff out. It was all about making sure he could get elected and getting through the election. And I think that's because really this is an election finance case. It's got really less to do with the salacious details of having an affair with a porn star or a Playboy model, and a lot more to do with hiding the money and keeping it from the public view, which would have become public if they had adhered to strict campaign finance laws. So I think we're now starting to see the case turn to that issue more than just the sort of salacious details of the relationship.
So we know, Rick, that Michael Cohen's in the courtroom, as well as the prosecutors, Trump's attorneys, Donald Trump himself, but there were a few other members of Congress who decided to show up and show support for the former president today. Congresswoman Nicole Malliotakis of New York was there. Senator Tommy Tuberville, Coach, as you may know him. Senator J.D. Vance, who has also been listed on the at least reported short list of potential vice presidential candidates who would be on the ticket alongside Donald Trump. But Donald Trump said this weekend at least one person is not on that short list, Rick, Nikki Haley. Does that surprise you?
Yeah, it doesn't surprise me. I mean, they never really made up. She hasn't endorsed him after her withdrawing from the primary campaign. And it's a constant reminder to him that she hasn't done that, because there are still people, as much as 20%, who are voting for her in the primary against him, even as he has already accumulated enough delegates to become the nominee. So she is an irritant to Donald Trump. Now, if it goes beyond irritant to the point where he insults her enough that those voters who are Republican voters don't show up in the general election, could actually cost him. So I was actually surprised he was as negative toward her as he was in his response to questions about whether or not he would consider her for VP. Doesn't seem to care about that 20%, but I sure would if I was running his campaign.
We spent some time talking earlier about the new Siena poll, new Siena College poll that's out today with New York Times, Philadelphia Inquirer, and it's not good news for Joe Biden. Jeannie, who's losing to Donald Trump in a majority of swing states covered here. When you consider the weekend that Donald Trump had on the Jersey Shore, big rally, huge turnout. He referred to Alvin Bragg as Fat Alvin. He talked about Juan Merchan, the judge, of course, presiding over the trials, quote, highly conflicted, unquote. Talked more about how the case is doing the bidding of President Biden. He'll probably, I'm assuming, face more concerns about violating the gag order in this case. But when you look at that Siena poll, getting back to what Rick said a little earlier, is any of this moving the needle on the campaign trail? Because it looks like they're existing in two separate worlds.
It sure doesn't seem to be. I mean, the first takeaway from this poll is consistency. It is consistent with what we have seen over and over again, almost since the fall. So, you know, the trial, at least so far, hasn't seemed to move the needle. And I would say, you know, local officials on the Jersey Shore, I don't know if Snooki was there, who was there, they're saying 80, 100,000 people turned out. Those are big numbers for Donald Trump. And I'm going to go out on a limb here and call this VP race for Doug Burgum. I think that was the story of the weekend. You know, speaking of Nikki, yeah, there we go. Speaking of Nikki Haley, she's a big problem. These quote unquote zombie voters who are increasing numbers. It was Indiana, to Rick's point, 22%. But Doug Burgum helps to alleviate some of that challenge. So between his money, which is another problem Donald Trump has, the Nikki Haley voters, and abortion, I'm saying my bet is on Doug Burgum at this point. A really good showing for Doug Burgum out there on the campaign trail for Donald Trump. And I know J.D. Vance is in the courtroom today, but he hasn't won me over yet on his VP race. Not that it matters.
Okay, so Jeannie makes her call.
Yeah, we're marking this down. What do we have here? 13th of May, Jeannie Burgum. Got it.
Yep, noted. Putting it on our little checkerboard here. Bingo card, maybe? I don't know.
That's where they're going to
Something
win
like
the campaign.
that. We're all going to be playing this game probably up until the day before the Republican convention starts in July. But Jeannie, just on this New York Times Siena poll, when you look at the demographic figures as well, perhaps it spells trouble for the Biden campaign. They're essentially tied with Trump among 18 to 29-year-olds and Hispanic voters, even though Biden got more than 60% of the vote of both of those groups in 2020. And Mr. Trump wins support of more than 20% of black voters, which is the highest level of support for any Republican presidential candidate since the enactment of the Civil Rights Act of 1964. Jeannie, when you look at figures like that, What's most concerning?
That is the most concerning thing about this poll. Exactly what you just said, Kaylee. You know, the idea that Trump could, if the election was held today, double the number of African Americans who support him is just stunning. It's historic. It suggests we are in a period of realignment. And boy, does the Biden team know this. If you look at his schedule for this week, the NAACP, he's going to Morehouse to do the commencement. He's talking at the African American Museum. I mean, they are going to try desperately to shore up this black vote, which he really does need. And he's got some work to do on that because Donald Trump is doing what no other Republican has been able to do in decades, which is he is attractive to African American, particularly young voters. Joe Biden's best hope here is that they don't come out in as much numbers as you know, some of the elderly people who support Joe Biden.
Well, I'm fascinated by that answer, Rick. A period of realignment. If that's the case, how do Republicans seize on it?
Well, I mean, there already has been quite a bit of realignment with Donald Trump. What we saw in 2016 was his ability to get blue-collar, white, rural males especially, who had been voting Democratic for most of their lives to switch over and start voting Republican. And became really the basis of the MAGA movement. The question now is there further movement toward that realignment? It's certainly not your grandfather's Republican Party, but the reality is I think they still fall along the lines of education and income and geography. If you are a black male without a college education, you're going to be more likely to vote for Trump, regardless of your skin color. Same with Hispanics. And what we're seeing is, you know, where you live matters. If you live in an urban area or suburb, less likely to vote for Donald Trump. So, you know, these are the realignments that are happening. Whether or not it continues in force this election cycle, too early to tell. I would say the thing that upsets the apple cart is turnout. In 2020, we saw the largest turnout in 100 years. 70% of the voters said, hey, I'm interested in this outcome and I care. This time, every single survey we're seeing says, you know what, I don't care about the rematch. It is not interesting to me, and I don't want to vote. And so you have almost half the country now saying, don't count on me to be an election day voter. So that changes the model completely, and how that model, you know, changes, we may not know until election day.
Really smart analysis today from Rick and Jeannie, our signature panel. Rick Davis and Jeannie Shanzano, our Bloomberg Politics contributors. Thank you both for weighing in here. I guess the big question remains, if this is a period of realignment, will it outlast Donald Trump? I'm Joe Matthew alongside Kaylee Lines in Washington. We've got a lot more ahead, starting with world and national news. Let's do that right now with Amy Morris in the Bloomberg 99.1 newsroom in Washington. Hi, Amy.
Hi, Joe. President Biden is expected to announce tariffs on Chinese electric vehicles and sharply increase levies for other key industries this week. Treasury Secretary Janet Yellen says the Biden administration wants to make sure American businesses are protected.
Given that China is really not playing by the rules in the sense they have enormous subsidies in critical areas of advanced manufacturing, has resulted in overcapacity.
Yellen was speaking exclusively to Bloomberg. Donald Trump's criminal hush money trial back underway in New York City. Michael Cohen, Donald Trump's former lawyer and personal fixer, on the witness stand to offer jurors an insider's view of the dealings at the heart of the case. Now, he's by far the most important witness in this case, and his appearance signals that the trial is entering its final stretch. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
My general advice is continue to seek out companies or people that are maybe 1 stage or 2 stages ahead of you. And I think this is generalizable to not just to startups, but anyone seeking fast growth in their own professional lives, in their careers too. What does greatness look like? Try to seek out people who've been there, done that before, and then try to not connect with one, but try to interview 3, 5, 10 people to see what is a general pattern of greatness that look like that will get you to the next level of the company, next stage, maybe a year, 12 months from now, 24 months from now. Seek out people who kind of went down the path a few times. Then you'll start to find this pattern that start to emerge. What are things that you need to have 12 months from now, 24 months from now that you currently don't have? Then try to like build a path towards that. It's almost like Amazon's or Jeff Bezos' mantra of working backwards. Think about what your end game or next stage look like, and then figure out your steps to getting there, and who do you need to work with, upgrading or coaching your existing team or recruiting from somewhere else to really level your leadership. Because ultimately, the job of a CEO is to do 3 things, right? One is get the strategy right for your company, making sure it's executed, get the right teams onboarded, getting the resources, whether it be fundraising or allocating your resources. So it's strategy, people, or team, figuring out how you need to navigate those things to get to the next level.
Another thing that startups need to look for is a market that is either started to undergo or is soon going to undergo exponential growth. I think this is actually related to one of the biggest mistakes investors make when evaluating startups. Investors always say, well, what's your growth rate? We care about the growth rate. Investors will forgive smallish revenue today if it's growing quickly. For some reason, people don't think about markets this way. But if you think about the most important startups, they are the ones that I start in small markets that are growing very, very quickly. 11 years ago, the market for iPhone apps was $0. It's now huge. And I think if you only think about the TAM today, you'll make a big mistake. What you really want to do is identify a market that's going to grow every year and be able to ride that up elevator.
This week.
Yeah, certainly something we're going to keep an eye on, just as we were keeping an eye on of the messaging with the Secretary of State, Antony Blinken, who was asked about this on one of the Sunday shows over the weekend. And this is what he said about the administration's thinking on these weapons for Israel.
We don't have double standards. We treat Israel, one of our closest allies and partners, just as we would treat any other country, including in assessing something like international humanitarian law and its compliance with that law. I would invite people to read the report. They can see for themselves everything that we've laid out in the report. The report also makes clear that this is an incredibly complex military environment.
Speaking on NBC's Meet the Press, the Secretary of State talking about the report submitted to Congress at the end of last week that raises concerns about Israel's use of U.S.-provided weapons in theater. But as we mentioned, there is a resolution that could see the light of day in the U.S. House this week that would ensure funding, military support for Israel. And joining us to talk about this and a few other stories, Congressman Chuck Fleischmann, the Republican from Tennessee's 3rd District. If you're with us on Bloomberg TV, you can see is literally in the field here doing constituent services. And Congressman, I appreciate your stopping your day for us as you prepare to return to Washington this week. Will the House pass that resolution? What do you think needs to happen?
Well, I think so. We need to be unequivocal in our support for Israel.
Having trouble hearing the congressman.
We need to be unequivocal in our support for Israel. Absolutely. After what happened to Israel on October the 7th, the United States needs to back its ally in the Middle East, Israel, in its right to defend its borders and its right to fix the situation with Hamas in Gaza. And we do not need to pause. We do not need to be vague. We need to be 100% behind Israel so they can wrap this situation up, deter terrorism wherever it exists in the Middle East, and move forward.
Well, Congressman, at the end of the day, though, knowing that this is largely a messaging bill, is there any further action that you would like to see your chamber take that is not just largely symbolic and meant to send a message to the White House?
Well, we were more than symbolic when we passed aid to Israel. We've passed it time and time again through the appropriations packages, through the supplementals and the like. But our speaker, our leaders, our membership has been on the Republican side overwhelming. Even Democrats have joined us. Many Democrats have joined us, as they should. Support for Israel needs to be bipartisan, needs to be bicameral, and we need it to start from the White House. We need to tell Joe Biden loud and clear, unequivocally, that he's got to support Israel. No pauses, no ifs, ands, or buts. Support Israel, get them the aid, get them the arms, let them secure their borders, complete this mission, and then let's work for peace in the Middle East.
Are you concerned about the findings in the State Department report, Congressman, that questions some of Israel's tactics in using U.S.-provided weapons in Gaza? Should Congress be concerned about this?
I'm personally not. October the 7th, Hamas was not concerned when they went in, raped, pillaged, plundered, killed, engaged in terroristic acts that are unspeakable, unfathomable. This was an incursion into the sovereign state of Israel, which cannot be ever tolerated, can never be condoned. So no, war is heck. War is horrible, and casualties happen in war that are sometimes unintended. But remember this, in the streets of Gaza, they were celebrating on October the 8th when Israel had been hit and terrorized. They still have American hostages. They still have Israeli hostages. Hamas is not giving them up until Hamas decides to do the right thing, give up the hostages, and agree to stop incursions into Israel. Think about it. They're still wanting to fire rockets into Israel. They're still calling for the destruction of Israel. So, again, the United States needs to be unequivocal in its support for Israel, for funding, for arms, for diplomatic aid, anything that it takes to secure Israel's position in the Middle East with its neighbors.
So we'll look to see further action from the House in regard to Israel this week, Congressman. There's also another issue, perhaps more time pressing, that will need to be taken up. The FAA reauthorization. The House last week passed a 1-week extension. The Senate passed the full 5-year bill last week. It will be the House's turn to take it up, and we understand it will be done under suspension of the rules. Do you anticipate any difficulty in getting that passed in time?
I don't. We need to get the FAA passed. It's a good bill. It's not a perfect bill, but doing it under suspension for your viewers means that it will require 2/3 as opposed to a majority. What that means is when you cannot pass a rule, and we've had some problems passing rules in the majority. I've always voted for the rule in the majority as a Republican. Some of my colleagues have chosen not to. Respectfully, I disagree with that, but since we can't guarantee the passage of a rule, I think our best chance is to do this on suspension, get 2/3. I think we'll get that done very quickly and with relative ease.
Congressman, I want to ask you a question from your view on the Appropriations Committee. We just went through a painful process to keep the government funded that sucked up the first third to half of this year. Knowing that we've seen at least a markup session on a Republican bill, we've seen the president, the White House drop their budget proposal. Can we get to work where your committees start before the last minute, say this summer or fall, for a regular order appropriations process in fiscal 25?
Joe, you're absolutely right. I believe in regular order. I believe in subcommittees, full committees doing their work, getting to the floor, getting appropriation bills passed, and getting them ready for conferencing with the United States Senate and ultimately to be signed. The reality is we are doing our work. I chair the Energy and Water Subcommittee of Appropriations, but I can assure you, Chairman Cole and all of the other 12 cardinals, of which I'm one, subcommittee chair people, will be working on their bills. Some of the bills, Joe, are easier to pass than others. My bill, the Energy and Water Bill, is a bill that is much easier to pass than some of the others. Legislative branch is an easier one. Milcon VA is an easier one, but some will be harder. What I anticipate will happen is we will write our bills, pass our bills out of full committee, get them to the floor in the best position to be passed. But the reality is, and I hate to predict, but with an election year, the reality I think probably will be a short-term CR into the latter part of the year, largely due to some of the complexities between the House and the Senate and Republicans and Democrats. But I'm going to work night and day to make sure that our bill gets done and that my colleagues who have other bills as appropriators will get their work done and get it done in due course. So I expect a better year. Okay. I expect all 12 bills to be done.
All right, Republican Congressman Chuck Fleischman of Tennessee, thank you both. Thank you for joining us on both Bloomberg Television and radio. We appreciate your time and insight into the work of Congress. But we want to focus now on the work of one regulator. The Federal Energy Regulatory Commission is taking aim at the grid. FERC approving today 2 rules to speed the development of new long-range electric transmission lines. One is smoothing out the regional process for planning and assigning costs for projects, and the other rule allows FERC to issue federal permits for transmission lines that are blocked by state regulators. Joining us now for more is Willie Phillips. He is the chair of FERC, joining us here in our Washington, D.C. studio. Mr. Chairman, welcome. Thank you so much for being with us. When we look at this pair of rules, how are they going to support a U.S. power grid that has proven time and again that it is quite strained?
Well, I have to say, thank you so much for having me here today. The U.S. electric power grid, it is the backbone for our American economy. But our grid is being stressed. It's being tested today in ways that we've never seen before. In the face of rising demand, extreme weather, and new technologies that are shaping the resource mix in this country, we took historic action today at FERC to address these urgent matters. It's urgent. It's now. We have to act now to plan for the future, because if we don't, we doom the reliability of our system. America cannot wait.
You must be getting calls about AI and data centers every day. This is all we're hearing about. When Constellation reported earnings last week, the entire conversation was not about how do they open a new nuclear power plant. It was how do we get data centers tied to nuclear, because there's not enough power available here to train all these language models that are going to apparently change our lives in the next couple of years. What is FERC going to do about the demand alone from AI?
You know, you're absolutely right. I hear from leaders across our industry all the time talking about how the unprecedented demand and load that they're seeing from data centers that's empowering this AI revolution that we're seeing around the country. It's in Ohio. It's in Virginia, which is the data center capital of the United States. We see projections that Ohio is going to put as much load on a system that's equal to the total amount of load of Manhattan in the near term. This is a problem, again, for the nation's grid. And so our rule, it's going to help bring on more generation. It's going to help us. There's no one thing that we can do that can address the reliability needs of our system than long-term and regional planning.
Do you expect that these rules, though, will run into any legal issues, potential litigation, as if the federal regulator is coming in to potentially step over state regulators in some cases?
I can tell you this as a former state regulator myself. I look carefully at these rules. We had over 15,000 pages of public comments from 200 individual parties. I am extremely confident that these rules are legally durable and that they will be upheld. That's a fact.
Texas remains an exception to the national grid, if I can call it that. What happens if Tesla starts cranking up these data centers, or if this AI demand starts coming from Texas? Will they play along?
So Texas, of course, you mentioned, they're proud of the fact that they have their own independent grid. But let's be clear, Texas is also a bellwether. You don't have to look any further than some of the extreme weather events that have happened in Texas and other places, and how it costs billions of dollars and it costs hundreds of lives. We know that Texas leaders also know that transmission reform is the best way to address these regulatory challenges and the reliability challenges that we have on the grid.
Do they call you for help?
We learn from Texas, and I think Texas learns from us. We're all in this together. That's what Congress said when they established the Federal Energy Regulatory Commission, that we're going to have a national role in making sure that we protect the reliability of our country.
which is much more difficult in terms of reliability when you are seeing those extreme weather events and climate-related events that you were just alluding to. Obviously, these rules are intended to make sure there is more investment in transmission, but I would imagine none of this happens overnight when we're seeing these kind of weather events in real time. How fragile is the grid in this moment in terms of exposure to that kind of thing?
Look, we know the grid is under stress, and we know that things take a long time. They take too long to build a new transmission. That's why these rules are so important. It will speed up the time that it takes to bring these resources that are waiting in the wings to come on. This rule is the best chance that we have to protect the reliability and affordability for our consumers. Imagine this. Imagine you're a senior. You're at home. It gets cold. The lights go out. It gets colder. You're maybe a little confused, and you freeze to death in your home. That's what happens. This is our best chance to address that need and to help consumers throughout our country.
These are the people who are obviously in your mind when you go to bed at night here. Are we in a crisis then in our remaining moment, or are you averting one?
We are absolutely addressing the need for reliability in this country. If we don't address it, we are facing a reliability crisis, absolutely.
I'm really glad you could come see us at the table today. Don't be a stranger.
All right, thanks for having me.
Give us an update on the progress at some point soon. He's the chairman of FERC, Willie Phillips, in a fascinating conversation, Kaylee, once again, that you will not hear anywhere else. We started this broadcast with the promise that we would take advantage of this calm here in the storm, the eye of the hurricane, to bring you some context and some smart conversations. And Kaylee, I certainly learned a lot.
I did as well. And of course, we'll be back for more at 5 p.m. Eastern Time with the late edition of Balance of Power. We'll provide an update of what's happening in the courtroom in New York's Donald Trump's hush money criminal trial. So that's later. Bloomberg Business Week starts in just a few moments right here on Bloomberg TV and radio.
Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
And a very good afternoon, everybody, live on radio, TV, YouTube, and Bloomberg Originals. This is Bloomberg Business Week. I'm Carol Masser. He's not Tim Stenevec. He is, of course, Bloomberg's Bailey Lipschultz. Great to have you here.
I'm enjoying it. How was L.A.?
L.A. was really, really good. It's a great backdrop, I feel like, for some of the conversations we're going to have over the next 3 hours, including in the next 60 minutes, because it feels like global leaders are weighing in on a lot today.
Exactly. Everyone's putting in their kind of 2 cents. The market, though, kind of on edge, not really knowing what to do, at least on this Monday morning, or Monday day.
It's like we have a big inflation print coming up or something.
Something big.
Which we do. All right, folks, we're going to get into that. As I said, a global focus. So we will hear from U.S. Treasury Secretary Janet Yellen. Did talk tariffs on Bloomberg earlier. Do wonder how that, Bailey, basically plays into also concerns about the inflation stresses that are out there and how that could just kind of add on to it.
So much going on with the global supply chain, so much going on, as you mentioned, geopolitically, what Yellen says, how other leaders across the globe react. It's all kind of one part of the same system.
Well, French President Emmanuel Macron reacting when he was asked about maybe could we do a big bank merger? Could a French bank maybe link up with another European bank? And he was kind of like, yeah, that could maybe happen. Maybe that would be a good thing.
It feels like everyone has to rethink. You know, the world changes. I don't know. I've been doing it for less than you have, so I feel like you've lived through a lot of these changes.
There's a lot of cycles. We go big and then we get retract and we see consolidation. Hey, one more thing too. I love this story. How not to miss a 23,000% gain. Yeah, you're going to want to hear that story. All right, first up, everybody, lots to come in the next 60 minutes. Let's get a check on that trade and some of your top business stories. Here's Charlie Pellet.
Hi, thank you very much. And here's what's going on. We have got the Dow, the S&P. They are both lower right now. NASDAQ is advancing. The NASDAQ Composite Index up 33 right now, up by 0.2%. Stocks, bonds, and the dollar all seeing small moves just a few days before the key consumer price index. Right now, we've got the S&P down 5, drop there of 0.1%. Dow Industrials down 92, a decline of 0.2%. The 10-year 4.47%. The 2-year 4.84%. Spot gold right now lower by 1%, 23.36 the ounce, and West Texas Intermediate crude up 1% right now, 79.09 a barrel. GameStop shares surging by 77% as speculation swirls around a return to social media by Keith Gill, who drove the meme stock mania of 2021 under the moniker Roaring Kitty. Again, GameStop roaring higher now, up 78.6%. Recapping, S&P down 0.1%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Masser along with Bailey Lipschultz right here on Bloomberg Business Week. Well, U.S. Treasury Secretary Janet Yellen said she hopes China will not mount a major retaliation against any steps that Washington takes to safeguard its investments in critical new industries. While Yellen declined to confirm that the Biden administration is poised to unveil new tariffs on Chinese goods, including EVs, batteries, and solar cells, she said in an interview earlier today on Bloomberg that any measures should be targeted to our concerns and not broad-based. That interview conducted by our own Anne-Marie Horton, who caught up with the U.S. Treasury Secretary earlier to talk about the subject of possible U.S. tariffs being imposed by President Biden.
He believes it's unacceptable, as I do, to be completely dependent on China in these areas. And he wants to make sure, given that China is really not playing by the rules in the sense they have enormous subsidies in critical areas of advanced manufacturing, has resulted in overcapacity. He wants to make sure that the stimulus that's being provided through the Inflation Reduction Act to support these industries, and these are industries that are creating good manufacturing jobs in parts of the country that have been overlooked or have suffered from deindustrialization in the past. The president wants to make sure that he protects these investments. And I don't want to get ahead of the 301 review on tariffs, but this is a commitment that President Biden has made, and I agree with it. I was in China just a couple of weeks ago and made clear that we would not allow Chinese overcapacity to harm our emerging industries.
Does the U.S. want a trade war, though, with China?
We believe that we should have a deep and productive, and that we do in most areas, trade and investment relationship. We're working to stabilize our economic relationship. We do not wish to disengage from China economically, but we do think that the playing field should be fair. And China engages in unfair practices like massive subsidies of industries they've decided are critical. And those are cases where we will act to protect ourselves.
We've seen Beijing in the past, though, respond, and it's become tit for tat. Are you expecting a response? Could they go after Tesla or maybe American farm products?
Well, President Biden believes that anything we do should be targeted to our concerns and not broad-based. And hopefully we will not see a significant Chinese response, but that's always a possibility.
That, of course, is U.S. Treasury Secretary Janet Yellen speaking. She is actually in Stafford County, Virginia today, making some comments on her latest domestic visit to showcase investments enabled by President Biden's policies, but talking to our Anne-Marie Horton there. All right. Trade wars, tariffs, maybe not top of mind for U.S. voters. What is, though, no doubt about it, is inflation. It does continue to weigh on a lot of folks' minds as the November presidential election looms. Consumer confidence last month hitting the lowest level since mid-2022, weighed down by concerns about elevated food and gas costs. And that's where we want to go, is the inflation print that we are getting this week. Let's see what our team has to say about that. Back with us is Bloomberg News international economics and policy correspondent Michael McKee, along with Bloomberg News chief correspondent for global macro markets, Liz McCormick, both here in our studio. All right, guys, so Janet Yellen kind of setting the stage there. First of all, Mike, I want to ask you, the possibility of U.S. tariffs on Chinese goods, how does that historically, tariffs, how does that impact kind of our economy and really the inflation picture?
It's not good for the economy, and it's not good for inflation, and that's been shown over and over and over again. Basically, U.S. companies importing things from China pay the tariffs, not the Chinese, and so then they raise prices to recoup those costs from Americans. So Americans have to pay more money, and of course prices go up, so that hits inflation. The latest CBO numbers studying the Donald Trump tariffs show that they cost jobs and they cost the economy. It helps certain sectors, very narrow sectors at times, but not always. The steel tariffs that Trump put on, U.S. steel companies simply raised prices but didn't do any more business, and several of their mills ended up closing down. So tariffs, economists generally agree, are a terrible idea. And Anne-Marie did ask if this would contribute to inflation. Unfortunately, the Treasury Secretary sort of had to, I think it was her job to dodge that question.
Yeah, I bet. So Liz, come on in on this. You watch a lot of different things that impact certainly the markets, the reaction in the Treasury trade. I mean, roll that in and just roll into what we really care about is the inflation print this week.
Right, exactly. I mean, all this, the tariffs looming in the background doesn't help. Like, we're trying to get over the hurdle, like you're saying, of this week with the PPI and CPI. But the whole theme of like reshoring in general has been a background inflationary. Then if you add a new kind of, let's not say tariff war, that won't help. But yeah, everyone is almost getting, like someone said to me, everyone is, all I hear is, well, wait till Wednesday, right? Wait till Wednesday when we have this CPI print. And, you know, there's the backdrop to this is, as we know, the labor data was a little softer. We're seeing cracks. The JOLTS was a little better. So people are thinking, if we can get this trend of hot inflation to end, maybe it's a lower print, the bond market may be off to the races, but we'll see, right? We've been waiting for a good number before, and it hasn't panned out, so there's a lot of focus. And of course, tomorrow we have PPI, which used to be something we could ignore.
Is it really a warm-up?
Now we have to talk about PPI. I know, Mike, you always liked it, but...
Well, it's something, somebody put it this morning, it's the undercard for the main event.
Right.
Well, what else are you looking at, though? We see PPI, we see CPI. It feels like we're back to good economic data being good for the market. Are we back? Does it flip-flop? Covering stocks?
It depends. It depends on what the data turn out to be. Are they good? And then who defines good? Because if you're looking for higher market rates and you get inflation staying where it is, that's what you're going to get. It looked like, I mean, from what I've seen in terms of the corporate bond markets, it looks like a lot of companies came to market because they think the possibility is we get a higher print and therefore rates go up, so go to market now. If you are looking for some progress, it would be good to have the CPI numbers go down even just a little bit to suggest that we're back on the road to lower inflation, and the Fed can the Fed isn't going to start thinking about cutting rates right away, but the markets will.
Well, go ahead, Liz. Come on.
I was going to say, like, a few fun facts here. I was looking at stuff is that, now Mike knows this, I'm sure, but so this CPI print, people are saying, is really going to inform in June, you know, the officials, when they have that June meeting, will change their dot plot, right? Now, there is another CPI, but it comes on the last day of the two-day meeting in June. So this CPI matters a lot. I see a lot of people focusing on that it may inform the dot plot even more than, although I think Chairman Powell has said people can change their mind the day of the meeting, so the June 1 release won't not matter, but there's a lot riding on this. So I think, and you know, when you start seeing people give you 3 decimal places on CPI, it's really important. And the last...
There's no rounding up here, guys. It really matters.
Yeah, but I mean, the last 2 core rounded to 0.4, but people are showing you each 1 to 3 decimals. So if it could just round down enough to be lower, it'll be good for the bond market.
You guys constantly remind us, and I know we have a lot of conversations around this table, it's not just 1 month, right? We need to see several months when it comes to inflation kind of starting to really significantly, or at least trend down and stick down and, you know, kind of keep that pattern, right? That's what we need.
Mickey Bowman, the Fed governor, said last week she didn't think we were going to get any rate cuts this year, and she said she needs to see 3 or more months of inflation getting closer to 2% before she's going to believe it's real. Now, she's the most hawkish, but we're in a situation where we're talking about 1 cut to no cuts is the definition of doves.
We're looking at CPI, though, at 3.6% ex food and energy. That's not 2%, not even close.
No. But at least if it's trending down, like Mike said, the month over month, if you can get a little better. But on the flip side, let's just say, which is, you know, obviously the consensus is a little lower, but if it's hotter, like at the last Fed meeting, people feel like Chairman Powell really, let's call it in the wonky land, cut off the tail risk of hikes. But if it re-accelerates, you wonder if even the options traders price in a little bit that maybe we get a hike. I mean, that's gone now. So I think that would be more of a surprise if it you know, re-accelerates, you know, so let's hope that doesn't
Remember,
happen.
the Fed doesn't look at CPI as its main gauge. It looks at
here.
PCE, and PCE headline is 2.7%. So that's a significant difference, and it's largely due to housing. And there's going to be a lot of focus on the housing numbers in the CPI report. Do they finally start to show the decline that everybody has been waiting for, or are they still hanging in there?
Right.
But the interesting thing is you take out housing from CPI and you get an index that looks a lot like what they have in Europe, because they don't put housing into their CPI, and it would put both at about 2.4%. So, you know, it's an interesting position for the Fed to be in.
Yeah, that's why they kind of focused in on the super core, right? Ex-housing and all this. There's a lot of, you know, in the weeds that they're looking at, right?
I will say at Milken, like a bunch of investors we talked to said, we have such a shortage supply of housing, and like none of these inflationary pressures are going to go away anytime soon. And that is not something like you can just build a ton of homes or rental properties or whatever overnight. And so you feel like builders are very, very cautious.
It's a very difficult problem to solve. I saw a commentator on Friday saying, you know, the administration should move to start making more housing, you know, getting more housing built. But the problem is not so much a national policy on housing, it's local policies in each city about zoning and density. And it's going to take a lot of work to really change all that.
Plus, the backdrop is you have all these people who have 2.25% mortgages saying, I'd kind of like to sell, but no, I'm not. You know, I don't want a 6% mortgage. So that is adding to the lack of availability of houses, right?
Well, I'm looking at the economic calendar. We have PPI, as you mentioned, Mike, the undercard, CPI, jobless claims, housing starts. How do we try to filter through each of these data points as they come in? Because when I look at the terminal, look at WIRP or different ways to track what rates investors are betting on, it's very whiplashy at times.
Well, yeah, to say the least, right? Yeah. No, and I think for the economy, like the inflation, PPI, CPI, but then retail sales, there's a lot of focus on that because the consumer has somehow seemed to plow along, although I guess it's somewhat bifurcated.
They've given up buying food because it's so expensive, so they're just going to buy stuff and travel.
In fact, I'm like glad when I'm alone, I'm like, I could eat peanut butter and jelly, you know?
It's no joke, right? Like you look at it, like you think about it, it comes up, arguments.
The interesting thing is that you say that because food prices have been flat for a couple of months. They have not been going up, and yet this is what's in everybody's.
But are they going down?
It's in everybody's mind. Well, yes, some go down. Most just stay where they are. But in food, there is a lot of basic commodity prices at work because your meats, your vegetables, your fruits are all going to be dependent on the commodity markets and whether things are going up and down.
Chocolate is so expensive.
Yeah, I heard that the other day that people are really upset about chocolate. But that you got to blame the weather and God on, I think.
Well, so what's the net? So Liz, so it's interesting. So it'll be 1 month's report. So I don't know, what's top of mind as we get ready for, obviously PPI first, then CPI? Because your story is like, okay, the only thing that matters is inflation.
Right. Well, it's not just us saying that. The data, if you look at the trading days for CPI, it has really mattered. Right? And I really think the backdrop of some signs of labor cooling a little bit means, like someone said, if CPI is soft, the market's off to the races. Meaning people just feel like that's last shed of we need to see some sign of disinflation picking up again, going the right direction down, So I think if it came in 0.2 or something, you're going to see the bond market run. A 0.3, maybe is good enough for a little bit.
You're talking about core or headline?
I'm talking about core.
Yeah.
Because I think the bond market just feels like, hey, Fed cut off the idea of hikes, at least they put off for now. Labor market's showing some signs of some easing. If we can get inflation to start going in the right direction, and you've had a lot of investors on saying they're buying bonds anyway because they think yields are good and we may not get these yields again. So I think something's got to really mess up that apple cart, like really hot inflation. Otherwise, I think the market wants to rally.
Yeah. Top of mind for you, and anything that you think could be nuanced.
Market does want to rally. Well, I think interesting note. Jay Powell is speaking tomorrow, and he'll be talking about the economy, and he's not going to have anything new to say because he won't have seen the CPI numbers. He'll be over in Europe, and so it's kind of a non-event for the Fed chairman, which is unusual. But I think what we may see if we get a lower print on CPI is we start to get the overreaction in markets of, oh, we're going into recession now because, and especially if retail sales come in as soft as expected. And now they got to cut rates. It just goes back and forth. It's a ping pong game.
It's pretty manic, right? Like I just do feel like the extremes.
I'll make this very quick. Philip Jefferson, who was the vice chair of the Fed, gave a speech on Fed communication today. And he said, overall, it's good to tell the markets what's going on, but there's a lot of confusion when so many people are speaking.
I agree. I think true. Like everybody, just stop talking for a while. But not you guys. Liz McCormick, Mike McKee. This is Bloomberg.
Another thing that startups need to look for is a market that is either started to undergo or is soon going to undergo exponential growth. I think this is actually related to one of the biggest mistakes investors make when evaluating startups. Investors always say, well, what's your growth rate? We care about the growth rate. Investors will forgive smallish revenue today if it's growing quickly. For some reason, people don't think about markets this way. But if you think about the most important startups, they are the ones that I start in small markets that are growing very, very quickly. 11 years ago, the market for iPhone apps was $0. It's now huge. And I think if you only think about the TAM today, you'll make a big mistake. What you really want to do is identify a market that's going to grow every year and be able to ride that up elevator.
I want a bank that shows me what I spend instantly.
We're Monzo. Give us a go. See?
I want a bank that can help me budget for the things I need, like a new leather jacket for Bingo.
We can do that.
Bingo's my cockapoo.
Hi, Bingo.
It's a real faff to sign up.
It takes less than 10 minutes.
Race you.
You're on. Time's up. How'd you get on?
It's a draw.
Is it? We hear you, Bingo. You make Monzo Monzo.
My general advice is continue to seek out companies or people that are maybe one stage or two stages ahead of you. And I think this is generalizable to not just to startups, but anyone seeking fast growth in their own professional lives, in their careers too. What does greatness look like? Try to seek out people who've been there, done that before, and then try to not connect with one, but try to interview 3, 5, 10 people to see what is a general pattern of greatness that look like that will get you to the next level of the company, next stage, maybe a year, 12 months from now, 24 months from now. Seek out people who kind of went down the path a few times. Then you'll start to find this pattern that start to emerge. What are things that you need to have 12 months from now, 24 months from now that you currently don't have? Then try to like build a path towards that. Almost like Amazon's or Jeff Bezos' mantra of working backwards. Think about what your end game or next stage look like, and then figure out your steps to getting there, and who do you need to work with, upgrading or coaching your existing team or recruiting from somewhere else to really level your leadership. Because ultimately, the job of a CEO is to do 3 things, right? One is get the strategy right for your company, making sure it's executed, get the right teams onboarded, getting the resources, whether it be fundraising or allocating your resources. So strategy, people, or team, figuring out how you need to navigate those things to get to the next level.
And Tesla has begun hiring back some of the almost 500 members of its supercharging team that CEO Elon Musk dismissed last month. Tesla shares, they're advancing now by about 2.1%. Recapping, S&P now lower, little changed at 5220, down less than 0.1%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
It is indeed. All right, Charlie, thank you so much. Carol Massar, along with Bailey Lipschultz. Tim Stenovic is off on this Monday. Well, REITs, we want to talk about REITs, real estate investment trusts. Not doing so well this year, but not surprising considering, Bailey, the higher U.S. interest rate environment.
We're seeing REITs under pressure. We've seen analysts pounding the table saying now's the time to buy. But
well, you do wonder, right?
Yeah.
In terms of valuations, maybe it makes sense. I just want to throw some data at everybody. According to Bloomberg data, U.S. REITs as a whole down nearly 7% year to date. Office REITs down about 5% so far this year. Industrial and warehouse REITs down 17% year to date. And this is again according to Bloomberg data. Our next guest invests in the space. With us is Steve Brown. He's senior portfolio manager at American Century Investments. They've got $243 billion in assets under management total. He's joining us here in our studio. Nice to have you here with us. How are you?
Thank you. I'm good. Thanks for having me.
Well, it's great to have you here. You know, we were just talking with Liz McCormick and Michael McKee of Bloomberg about the inflation print this week. It's top of mind for us because obviously it's top of mind for the Federal Reserve and what they might do in terms of monetary policy. What are the metrics you most keep a watch on for your world?
Sure. In our world, we really focus on real estate fundamentals, but in terms of the broader economy, we see CPIs lower today than it was 12 months ago, so that's a positive. We also see that the Fed hasn't cut rates or hasn't raised rates since July of 23. So they haven't cut rates, but they've maintained short-term rates at a flat level since July of last year. And then finally, the 10-year, which we do spend a lot of time monitoring, you know, it's bumped around this year. It's around 4.5%, but it got as high as 5% in October of 23. So it is a little lower than it was 5 or 6 months ago.
Are you putting money to work right now? Like, what's going on in terms of, again, Carol mentioned all the stats about the underperformance in 2024. We've seen people saying now's the time to put some cash to work.
Sure. We are putting money to work, and what we're focusing on is property sectors that have pricing power, meaning the ability to raise rents higher than inflation. And there's a number of sectors like that to invest in, whether it's senior housing, data centers, single-family rental, Class A malls, open-air shopping centers. But there are a number of property sectors that do have pricing power in 2024.
Well, it's interesting. So of those, it's interesting, data centers, something, again, coming out of Milken. When we talked artificial intelligence, it felt like the investment landscape was like, okay, data centers and energy, renewable energy to power all of those data centers. What specifically, tell us a little bit about the activity that you're seeing there and where you're going.
Sure. Within our investment universe, we have a couple of data center REITs. They're quite large, though. And obviously, they're benefiting from the demand created by AI capital spending. There's more demand from the AI tenants to expand or take more space in data centers. The companies we have large positions in own data centers, are expanding their data centers, and are building new ones. And their existing data centers do have access to power to handle the higher demand from their tenants, the higher power demand. So it's a good setup. So in terms of an earnings outlook, 5, 6, 7, 8, 9, 10% within the REIT space is pretty attractive in 2024 and 2025, driven by AI-driven capital spend. They don't necessarily have NVIDIA as a tenant, but they have NVIDIA's clients as tenants in the data centers.
Right.
Yeah, I'm looking at Digital Realty. They sold $1.5 billion in shares last week.
That's right.
With raising this cash and the ability to put money to work within data centers, which to me is fascinating. Is that an area where you're looking at individual companies? Or are you guys buying it through a basket portfolio strategy?
We focus on a couple names that we're very excited about. And Digital Realty is certainly one. Equinix is another. Digital Realty, yes, they did $1.5 billion equity raise last week. It's to fund development projects in 2024, 25, and beyond. They have access to capital, both debt and equity, as proven by last week. The stock's trading at a nice premium, so it's a premium to net asset value, so it's a good time to raise equity. But they have a good use of the proceeds in terms of expansions and ground-up development within their global data center footprint. So they'll get a good return on that money. And I think the stock has bounced back nicely from that large capital raise.
And when you're looking at some of these subsectors within REITs, just because of the different exposure, do rate cuts kind of predicate how you guys put money to work and how you think about which areas are better set up than others? And how does that kind of play out?
If we do move into an environment where the Fed's cutting short-term interest rates, the question is, why is the Fed cutting rates? Is it because inflation is moderated? That'd be one scenario. If they're cutting rates because we're falling into a recession, that'd be another scenario. I think if they're just cutting rates because CPI is coming down from, say, 3.8 to 3 or something like that, then there's certain property sectors that have sort of been out of favor that would probably rally pretty aggressively, like we saw in the fall of last year. The REITs had a very aggressive rally when the 10-year finally peaked and started to roll over. And there were certain sectors like the office sector and some other sectors that have more highly levered balance sheets that went up the most in price. They benefited the most from the advent of lower rates. That happened in November and December of last year. And if we go into that type of environment this year, that would probably happen again.
Do you office anything opportunistic? I mean, some would say, okay, actually coming off of Milken, folks were saying this might be the buying time of a lifetime in a bunch of office properties because they've been so beaten down. How do you see it?
Well, last year we did generate some alpha in the strategy through our office investments, not really owning them in the first half, coming into them in the spring of 2023 when they were trading at 30 to 40% discounts to NAV.
Yeah.
And then they rallied quite strongly when the 10-year peaked at the end of October, and then when the rates dropped from 5 to, say, 4% in the last year. They have hung in there so far this year, as you mentioned at the top of the show. It was really driven by one big New York name, SL Green, that's done a lot of interesting transactions. The rest of the names have sort of lagged the
index.
It's
really skewed the market.
Yeah,
but go
it's
ahead,
really
please.
SL Green. I would say that we're paying attention. We are underweight office today because we're concerned about demand. They don't have pricing power, meaning that supply is greater than demand in the office sector because of really the embrace of work from home. But we do think that there is demand for Class A office, and we do think that if we have a soft landing, job growth will continue, and that will point to a better outlook for office. I would say, though, many of the companies have above average leverage, and they don't have pricing power, so that's a bit of a turnoff right now.
And when you look at some of the different central banks and the different effects that has on a global perspective, are there areas that you guys are focused on? Are you guys a global fund? Like, do you look at U.S. versus say, Europe or
Sure.
different regions?
We do have a global strategy. That's our core strategy, actually. And other economies around the world have had lesser nominal growth than the U.S., so they have more flexibility to cut rates. So we have seen that in Asia, parts of Asia, quite exciting. Europe, which is not showing much economic growth, but that sets them up for the potential to cut rates. There's some interesting discount to NAV ideas there, discounts to the property value. It's quite a bombed-out area also.
Are there any names that you could mention that fit kind of that target?
Well, I would say a couple things. One is we've been able to invest in data center REITs or data center real estate companies also in Europe and Asia, so that's been exciting. And we've begun to look through the sort of the wreckage of European properties because they're trading at big discounts to NAV. And I mentioned Class A regional malls have pricing power, and there's some regional mall names in Europe that are attractive that we think will have good total return for 2024.
Well, it's interesting, and we're going to hear, French President Emmanuel Macron catching up with our own John Micklethwaite, talking specifically about a big event going on over in Paris, all about bringing investment in, but was questioned about potentially consolidation among the financial space and whether a French bank hooks up with another European bank or so on and so forth. So I'm just curious how you think about kind of that broader real estate play in terms of some of the bigger macro trends that are going on in Europe today.
Sure. Well, one of the big trends is, as you mentioned, is consolidation or also a reduction in capital to various activities like real estate.
Mm-hmm.
Construction lending is down both in North America and in Europe because of a variety of reasons, just a higher risk associated with the construction lending and poorer returns. So while that's a fact of life, and that was true in 2023, and it's true this year, 2024, what we're seeing, though, is a slowdown in supply in both Europe, which you mentioned, as well as North America. And we think that sets up a good environment for real estate and pricing power as we move through 2024 and 25, as supply growth could come into like 1 to 2% supply growth, and demand growth could be 2 to 3. So you'd have improving demand would be greater than supply, both in many sectors in the U.S. as well as Europe.
Well, and one thing I want to ask you, since you are global, and it just feels like all of a sudden everybody's talking about Japan and opportunities. Are you seeing any opportunities in terms of the real estate over in Japan?
Yes, we've had a lot of success in Japan this year, mostly through the Japanese developers. They're not the J-REITs, but they're the developers. And they own large swaths of commercial property in Greater Tokyo, and they've benefited from the improved growth prospects in Japan and the huge discounts to NAV they were trading at, say, 6 to 12 months ago. It was not uncommon to see Japanese developers trading at 30 to 40% discounts to NAV. And as there was greater confidence in a sort of a modest recovery in the Japanese economy with a little bit of inflation thrown in, these Japanese developers really worked quite well over the last 6 to months or so.
Where don't you want to be? 30 seconds at all. Stay away.
Okay.
I didn't hear China, and I don't know if you've got exposure to China real quickly.
China's not in our index, but Hong Kong is. And Hong Kong's had a nice rally. We still have some questions about that. But I'd say the areas we're concerned about is we're still concerned about self-storage. It's a sector where they don't have pricing power. I mentioned some sectors have pricing power. Well, rents are going down really 10 to 15% in the self-storage sector.
Interesting.
So we don't have confidence to really embrace that because rents are going down.
Feels like there was such a build out, and I think we're all like, enough storing stuff and paying for it, just get rid of it and go travel, essentially. Steve Brown, we covered the world. Thank you so much.
Thank
really
you.
Appreciate it. Steve Brown, he's Senior Portfolio Manager at American Century Investments, $243 billion in assets under management. Hey, coming up, we're going to get more on that conversation that our John Micklethwaite had with French President Emmanuel Macron. In the meantime, let's get a check on world and national news over to Amy Morris. She's in D.C. Amy.
Thank you, Carol. Treasury Secretary Janet Yellen says she hopes China won't mount major retaliations against any steps Washington takes to safeguard its investments in critical new industries.
The president believes that it's critically important for the United States to have a role and a presence in strategic industries like semiconductors and like clean energy.
That's new industries. Yellen was speaking in Stafford County, Virginia, on her latest domestic visit to showcase investments enabled by President Biden's policies. A federal fraud trial has begun for the owner and chief financial officer of Archegos Capital Management. The downfall cost leading global investment banks and brokerages billions of dollars. One prosecutor told jurors in Manhattan that Bill Wang and Patrick Halligan built a house of cards on manipulation and lies. Ex-Trump lawyer Michael Cohen claims the former president trusted him to handle sensitive matters, allegedly paying adult film actress Stormy Daniels before the 2016 election to cover up a 2006 sexual encounter with Trump. And jury selection is underway in the bribery trial of Senator Robert Menendez, the embattled New Jersey Democrat potentially blaming his wife for the predicament, seeking to call a psychiatrist to defend why he hoarded the cash and 13 gold bars. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
2:40 on Wall Street. We do check markets all day long here at Bloomberg. A little change right now on the S&P 500 index, down less than 1 point to 52.21. We have got the Dow Jones Industrial Average down 53, a decline of 0.1%, while NASDAQ is up 43, a gain of 0.3%. Stocks, bonds, and the dollar all seeing small moves only a few days before the key consumer price index. 10-year 4.47% with a 2-year 4.85%. Spot gold right now down 1%, 23.36 the ounce, and West Texas Intermediate crude up 1.2%, 79.19 a barrel. GameStop shares surging today, up 77%. The speculation swirls around a return to social media by Keith Gill. He drove the meme stock mania of 2021 under the moniker Roaring Kitty. Right now, we've got GameStop roaring higher by 77%. And Kraft Heinz said to be exploring a sale of its Oscar Mayer unit. This, according to the Wall Street Journal, Kraft Heinz shares up 0.7%. Recapping stocks, little change right now with the S&P down by 0.5 point. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. We said we were global this hour, so we do want to get to Emmanuel Macron, who unveiled more than $16.2 billion in foreign investments from Amazon, Microsoft, and Morgan Stanley today. And it's all about spurring France's economy, repair its public finances, and establish Paris as Europe's post-Brexit financial hub. While the projects were announced at the annual Choose France Summit, it brings together 180 executives at the Château de Versailles. The event, now in its 7th year, is a key part of Macron's push to reindustrialize the country and attract more foreign investment after a long period of economic decline. Well, Bloomberg News editor-in-chief John Micklethwaite spoke with the French president earlier today. Among the topics that came up, the French energy giant Total moving its primary listing to New York. Needless to say, the French president was not too happy about it. Listen up.
Not at all.
And I would be very surprised. No, I wait for any confirmation. I understood it was remorse, so...
But it's interesting that it's tied to the idea that he would face extra ESG measures here that he would not face in America, and he thinks that would affect his valuation.
Do you mean that we are more serious than the US in terms of green economy and transition?
Yes, but you also, in your speech at the Sorbonne, you said, as I'll paraphrase, you said you cannot let decarbonisation and growth be enemies, and this would appear to be an example.
And this is my point. Yeah. But the point is just, we have to be sure when we regulate, we should not over-regulate.
Yes.
And I think now we have to deliver. We need in Europe much more investment. We have to cut red tapes, have more flexibility. The European Union is the most open place of the world. But you cannot survive if at the same time you have subsidies and overcapacities in China and protection in some part of the market, and Inflation Reduction Act and Buy American Act in the US. It doesn't fly 1 second.
So Europe has got to get tougher now.
But this is a necessity, not because we are protectionists, but just because we want to protect our economy.
The Germans do not agree with you about this.
I think it depends whom in Germany and for which perspective. It's totally true that some German companies, when they are incorporated in China, for instance, benefiting from subsidies, not just German, European, American, their interest is probably to preserve that and to sell themselves their overcapacities in China to the rest of the world, and especially the European market. But the German economy's interest is totally aligned with the French economy's interests, meaning creating jobs, creating value, but just protecting your business and your people when they are attacked by unfair measures. And it's normal. It's part of the business. So for me, it's just a no-brainer.
All right, that, of course, was the voice of French President Emmanuel Macron. You saw him there as well. Bloomberg News editor-in-chief John Micklethwaite, of course, having that conversation. That conversation, too, by the way, and the summit is the Bloomberg Big Take story today, which you can find at Bloomberg.com/Big Take, wherever you also get your podcast. With more is Bloomberg News host of Bloomberg The Big Take podcast, David Gora, here in studio. A little heated there.
Got a little heated. Something we can do with the podcast is take a step back, and we talked to John Micklethwaite after this interview, asked him how it went and what stood out for him. And this was one of those moments. Emmanuel Macron was somebody who, when he was campaigning for the presidency in 2017, talked about a revolution in France, and that was to kind of upend the old guard. He was the head of this new party. He's very young. He was 39 when he became president, and he had all of these designs on how to make France more attractive for business. What he's showcasing here is his interest on making Europe more open for business and more able to compete against the U.S. and China. So just to pick out a few things from what he said there, this notion of tariffs and standing one's ground against China is something that's being very widely and hotly talked about right now.
Everywhere,
yes,
like.
And he felt, later in the interview, talked about how they missed the boat on solar panels and China really raced ahead as a result. So it's something he cares a lot about, but also in that excerpt that we heard, this obvious tension that the French president is facing, which is there's a lot of kind of do-goodery associated with the way that business is done in France. How much of that can you maintain if you're trying to get American and other multinational companies to come in and do business in
The rules
France?
and restrictions, right, that make it much more difficult potentially.
And he's faced problems right and left. So again, he talked about revolution at the beginning. That was easier said than done. We get into that a lot in the podcast as well. You know, he has made changes. We saw the retirement age go up from 62 to 64. Very young still, many would say. And there were a host of challenges in France, protests across the country, and he's had to deal with that over and over again. So all of this is happening within this crucible of politics in France, which is always fraught. Protests are very common. Strikes. He's not up for re-election. 2027 is the next presidential election, but there's a European election around the corner. There's another election coming up kind of after that in France at the parliamentary level. So there are things that he has to be mindful of, and there's this kind of shift in political terrain, a movement toward the right. He's very cognizant of that, so it's happening against a very fraught political backdrop.
Well, that's within France, but also, as John Micklethwaite mentioned, they've run into opposition from Germany and other allies. So you're dealing with it not only inside your country, but also across the bloc that you're trying to unite. How is that playing out?
With difficulty. It's a really great point, and it happens here in the context of the economy, but we've seen it play out in the context of geopolitics as well. And so Emmanuel Macron is somebody who has been raising the flag that Europe needs to do more to help and protect Ukraine as that invasion enters its well into its second year now. So it continues to be a fraught thing, and it just highlights again the difficulty of this member bloc where you have 20 plus member states trying to jockey against one another to get things through. And another moment that stood out in the interview is John asked about bank mergers. In the U.S., we have these giant banks, and they're giant in large part because we allow bank mergers to go through. Much harder to do in France. And John, quite wonderfully and trickily, floated this thing where she said, would you let Societe Generale be bought by a Spanish bank? I wouldn't say that he caught the French president, but he admitted that he would be open to it. And that's the kind of difficult ballet that you have to do if you're going to be somebody who thinks that there should be this European project, and that should be something that will allow mergers like that to go through.
David, when you first talked with John kind of after the interview, like what was it the first thing you wanted to know? Was it like his take on like what the feel of the event was or what?
Totally. And I didn't know how much he'd talked to him in the past, but John said right from the get-go, he's known President Macron for almost 20 years. So they've talked over the years. And he said that something that's been interesting as a result of that is kind of studying the evolution of the goals that the French president has. And so we were just talking about it, like going from looking at the French pension system and social services to how France's place in Europe might change in the context there. And then I had to ask about the backdrop. I mean, this took place at Versailles, and that's where Macron has brought all of these executives, including David Solomon of Goldman Sachs, to come and have this meeting. I mean, a spectacularly beautiful place. And John allows, and this is the podcast, so he calls up a friend.
Nothing low-key about that.
Nothing low-key, but he called up a friend, said they're going to do the interview at Versailles, and the friend couldn't believe it. But it is something that the French president is able to roll out selectively, and has this kind of wow factor that one can't help but notice who's watching the interview, but also these executives who are coming to town, you are wined and dined and treated to something that is
not to be kind of a little
pretty
bit
special.
in awe,
Yes,
right?
yeah, exactly.
And so with that whining and dining, is it working? Is it going to work? Did you get a sense from
I mean, John? $16 billion is no small amount of money, but he definitely wants more foreign investment to come into France. And Carol, you mentioned Brexit at the top. That was a moment when there was a really stark contrast. There was this fear, could banking and financial services continue the way that it has been in London? And France was able to make a very quick and solid appeal. I think that the challenge is how do you sustain that and make it a place where particularly companies and financial services want to be. I'd say that it's working, maybe not as well as he would like it to be, and it's, again, an ongoing project that he has to figure out.
It's just an interesting time. Like, I think about Hong Kong, how it's been upended. I think about coming off of Brexit, right, where London was upended as really kind of these global financial centers, and we're just kind of trying to figure out our way forward here.
Global Wall Street really, really changing, and those are two great examples of how that's been the case in just recent years.
All right, well, great stuff. Looking forward to it. Of course, David Gora, he is the host of Bloomberg The Big Take podcast, which you can catch it on the Bloomberg and also at bloomberg.com/Big Take. All right, still to come, the big mistake investors make by, well, you know what it means? They miss out on like a 23,000% gain. That's a big one.
Big miss.
That's a big miss. One more thing. That's straight ahead. You're listening and watching Bloomberg Business Week, and this is Bloomberg.
company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Pro in markets outside the U.S., testing whether the $3,500 mixed reality headset has broader appeal. Sources say Apple began holding training sessions in recent days and has flown hundreds of employees from its international stores to Cupertino to learn how to demonstrate the device to customers. Again, Apple right now up by almost 2%. GameStop shares surging today as speculation swirls around a return to social media by Keith Gill, who drove the meme stock mania of 2021 under the moniker Roaring Kitty. GameStop up now by almost 76%. Sources tell Bloomberg Walgreens Boots Alliance is reaching out to potential buyers of the $8.8 billion Boots drugstore chain in the United Kingdom. Those sources say the Deerfield, Illinois-based company is working with advisors to hold early-stage discussions with would-be bidders. A sale would undo a blockbuster transatlantic merger that took place in stages beginning more than a decade ago. Intel said to be in advanced talks with Apollo Global Management over a deal that would have the investment firm providing more than $11 billion in funding for a chip manufacturing plant in Ireland. That, according to the Wall Street Journal. Apollo down 1.6%, Intel up by 2.6%. And in the mining industry, BHP Group says Anglo American has rebuffed an improved offer it made, which it said valued the company at about $43 billion. And those are our top company stories at this hour. I'm Charlie Pellet, and this is Bloomberg.
This is Bloomberg Business Week with Carol Massar and Tim Stennebeck on Bloomberg Radio and Television.
All right, everybody, Tim off today. Bailey Lipschultz here with me on Bloomberg Business Week. We have more in just a moment. First up, though, let's get back to world and national news. Off to D.C. we go, and Amy Morris. Amy.
Thank you, Carol. Treasury Secretary Janet Yellen says she hopes China will not mount major retaliation against any steps that Washington will take to safeguard investments in critical new industries. In an exclusive interview with Bloomberg, Yellen declined to confirm that the Biden administration is ready to unveil those sweeping new tariffs on Chinese goods.
President Biden believes that anything we do should be targeted to our concerns and not broad-based. And hopefully, we will not see a significant Chinese response, but that's always a possibility.
Yellen was speaking in Stafford County, Virginia, on her latest domestic visit to showcase investments enabled by President Biden's policies. Jury selection continues in the bribery trial of Senator Robert Menendez. He's expected to call a psychiatrist to defend why he hoarded $480,000 in cash and 13 gold bars that FBI agents found in his house. Prosecutors charged Menendez and his wife with accepting cash, gold, and a Mercedes-Benz in return for favors. Menendez has suggested that he may blame his wife, who will face a later trial because she has an undisclosed illness and needs surgery. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris. Now back to Bloomberg Business Week with Carol Massar and Bailey Lipschultz.
All right, Amy Morris, thank you so much. All right, folks, now to our one more thing this hour. And, you know, I was looking at, Bailey, the S&P 500 is up about 27% since late October of last year. So it's had a pretty nice run.